Perfect. Ladies and gentlemen, may I ask you to take your seats, the final ones going in? Please join us. You're all more than welcome on this beautiful day. We'll be spending it inside the afternoon, but I'll promise you it's worthwhile being here. Thank you. Join us, take up your seats. Speakers preferably in the front. All other guests, you're free to seat wherever you want. Thank you all. Nobody downstairs anymore for their coffee. It's time to drop it and come back up here. Thank you. What a wonderful day and what a pleasure for me to welcome you here today on this 1.5-day symposium, because we returned, as you've seen, to the 1.5-day format this year. Members of European Parliament, members of National Parliament, speakers, distinguished guests in all your ranks and titles, ladies and gentlemen. Welcome to this beautiful, beautiful spot, which is AutoWorld. Welcome as well to all the ones following us at home, because as you've read, plenty of people are following with live stream back home as well. And when I say plenty, that's several hundreds of all over the world following us, and even more tomorrow. So we have an entire world vision today. They will be able to join in as well, because back home, as well as you here in the audience, you will have the opportunity through Slido to join us, but a little bit more on that later on. First of all, for those of you present, you've seen that the choice that we'll make today, it's a wonderful spot filled with horsepower, and I'm not talking about the people present in the room, but I'm talking about the cars downstairs, of course. So it's a personal choice made by the co-hosts of today to host it in this special spot. And there's a lot to be said about car taxation as well, of course. So it's an ideal topic if during the coffee break you don't find the speaking subject, you might start wandering off looking at the cars and talking about how much it would cost and how much VAT that would be in your respective countries. First of all, and then before starting, we will go through some household rules so that you're all well prepared for this afternoon. As you'll see, you had a Wi-Fi network. We're in a classified building full of steel and glass, so you will have noticed that the GPS signal is weak to non-existing. For us conference organizers, that is a dream, because that means that you will not be able to answer calls during the sessions. Of course, you might be clever and switch to WhatsApp or Signal on the Wi-Fi network. So we have the Wi-Fi here. You can use it, EU Tax Symposium, Tax Mix 2050. For the question and answers, you'll be able to do it through Slido. Most of you probably know it. If not, you have a QR code on the back of your cards that you can actually scan at the time when it's necessary, and then answer the questions after entering the code #TaxMix 2050. That's for the question and answers. Downstairs, most of you will probably have seen already when you had your coffee, we have on the high table some conversation starter cards. So if you're lacking of subjects to talk to your neighbor or the one standing at your table, feel free to pick up those cards and you'll see it will initiate a conversation amongst you. And of course, there's an interactive screen downstairs as well that you can use throughout the afternoon with polls, suggestions that you could give. So plenty of opportunities to actually join in and have a very pleasant afternoon with us. Final reminder, and that's the usual one, of course, the premises are entirely non-smoking from the very minute you came in until the minute you go out again. And may I ask you, if you haven't done it already, to lower or shut down the volume, at least, of your cell phones, not to interrupt speakers while on stage. The conversation starter cards and the interactive screens, we've been going through them. And then, of course, we will start so that we're sure that you're all on the same page with a Slido question. We will kick it off. We will make you live and kicking and involved from the very beginning. And that goes for you, the people back home as well. So if we could have the first question for the Slido. So no people that are not familiar with it. So you scan the QR code and then you will be able to give your answer to the question, what word do you associate with EU taxation policy? I told them up front that it was a very bold question to ask from the start, because I know that plenty of you will have words popping up, maybe not always the nicest and the kindest words. Oh, interesting, interesting. Oh yeah, there we go, there we go. This pain, it's painful for someone. Omnibus, headache, unanimity, horsepower. Oh, it comes back already. Someone's worried about the car taxation. Wealth, missing. Okay, sorry. People answering. My Arab is not what it used to be anymore, so if there's anyone able to translate that, please stand up and feel free to do so. Admin burden, wealth tax, finally, fragmentation, too high. Harmonization, 28 tax regime, VAT, there's plenty of things popping up. Even names already, someone are already waiting for some speakers to head up. Tobacco causes cancer, yeah, unfortunately it does, we've been told. Mr. Tridico, they want you to come on stage already because your name is already up there. You have at least one fan at home or in the room already claiming. Wonderful. Super, plenty of things, necessity, toothless, duties, everything. We cope more or less the whole scope from left to right, from low to very high, from wealth to painful, from weak and insufficient, a need to be flexible, tax integration. So that means, in general, ladies and gentlemen, plenty of topics, not only to fill this 1.5-day conference, but to fill many more conferences to come. And as we should tell the co-hosts today, in case they wouldn't know, once you organize something for the 4th time, that means you exceed 3 times, it becomes a tradition. So you need to keep up with good traditions. So we would expect them to organize one next year and then the year after that as well, and to cover all of these topics. Thank you all for participating. And then a second, an easier one on the Slido to give you an idea of the different kind of questions you might get throughout the afternoon. This is a poll, so you do not have to come up with any creative answer. Just, oh my God. The first ones coming up were the private companies. They're always a little bit faster than the public servants, aren't they, in responding to the questions. But. Many, yeah, it's going up and down. Stable, government, public institution is staying quite stable. 35, around 1/3 of the people present today. Many of them coming from the private sector as well. EU institutions, of course, all the colleagues already involved in organizing it. That already adds up to, I think, 10% of the audience. Other, you might wonder what that is, but anyhow. University research, always helpful as well. 10%, and civil society as well. It comes a bit at the very bottom, but they're there as well, and more than welcome. 5%. So we're remaining about approximately same figures. 1/3 coming from private companies taking over the lead as we speak. Oh my God, this is like the Tour de France. They're taking over one after the other. 1/3 private companies, 1/3 government, and then of course EU institutions. That means that we have exactly the audience we wanted here today, meaning a mixture. It makes no sense for private companies getting together. Well, it makes sense, but at some point in time, you need to speak to the public side and the other way around as well. If the public side only talks with public officials, things are not going to move forward either. So we need each other, and that's why I'm very happy that we have all of that here present today in the room and back home, of course, because people watching back home are active in certain sectors too. So without any further ado, I will kick off officially this symposium by asking already the first co-host to the stage, and that would be to join the Slido, but that you have Mr. Pasquale Tridico, member of the European Parliament and chair of the subcommittee on tax matters. Please join me on stage for the welcoming words to all guests present here today. The floor is yours.
Thank you. Thank you very much for this introduction. Thank you to all of you for being here. It is really a pleasure to co-host with my friend Gerasimos Thomas this wonderful event, and with all the coordinators for the subcommittee on tax matter. So the tax committee is going really well. In the last 2 years has been an increasing of registration. This year will be more than 1,000. Last year we were more than 900. So it is an increase. It is satisfactory as well for all the staff which is involved in this organization. 1,000 people is really a lot. And for the staff of the EU Commission, Tax Sud, and for the Secretariat of the Subcommittee, Tax Matter, is really a great work. So thank you to all of you, for the staff, to organize this. Let me start with saying something which is obvious, but we need to climb this once more. The European social model is different. And we see how this difference is really important even today. With this all geopolitical change, we know that Europe is different than the United States. We know that Europe is different than many other countries in Asia. We know what are the advantages of our model. We know as well what are the problems of our model. And as a comparative economist, I usually look at other performance to see what is good and what is bad. We know, for instance, that taxation lies at the very heart of the European economic and social model. And taxation finances our public goods, support investment in our future, and form the backbone of the social contract between citizen and institution. Think, for instance, at the European Union priority today as well, defense, how taxation is important as well for that. At the same time, ensuring that our tax system remain fit for our purpose is not a simple task. It's a compromise. It's a balance. The challenges we face today are complex and interconnected. Rapid technological change, the green and digital transition, and the geopolitical uncertainty. And the need to strengthen European competitiveness is today at the heart. All that requires a more efficient tax system, yes, but all that requires as well that we change our tax system within Europe. Few weeks ago, in the Parliament, we discussed about the cost of non-Europe. The cost of non-Europe given by the fragmentation of taxation within Europe. The European Commission came up with a proposal, which is fine, the 28 regime. But think about what the 28 regime is about. It's about to create a common country, a common market, where basically same rule applies. We could as well think about harmonization of this rule within the 27 member states. The two things are not in contradiction, but actually the two things satisfy the same objective, meaning to reduce the fragmentation within Europe. One of the central questions today we face is how taxation can support growth and innovation. Tomorrow, we will have Philippe Aghion as a Nobel Prize 2025, speaking in claiming that innovation boosts economic growth. The real question for economists is how to get innovation, because we know that innovation boosts growth. The problem is how to get innovation. Well, citizens and business expect tax systems that are clear, predictable, and easy to comply with the change. Excessive complexity increase administrative costs. And you have seen as well that before, when all the words were matching, and complexity was one of the words which emerged very much. Complexity can be reduced with simplification. This is what the Commission is doing. But complexity can be reduced as well with harmonization within Europe. And this is what I would like to advocate here. Simplification is an important objective, but simplification should not come at the expense of transparency or accountability. Many of the rules that exist today were introduced for good reason. To reduce unnecessary complexity, however, to design smarter systems, to harness technology, we need to do something more. And we know what it is needed, in fact. It is not easy it is not easy to reach a consensus within member states. We know that tax policy is a national sovereign policy. But we can reach that through empirical evidences. And this is as well why tomorrow, beside Aghion, we invited another Nobel Prize, Joseph Stiglitz. Both of them, Stiglitz and Aghion, offer, I think, the better view possible today to challenge the issue of how innovation fosters growth and to keep cohesion within the model. If we care, as we care, about our social model, which is resulting in social cohesion, we need to listen as well what economists and empirical evidence say about inequality and polarization, which is as well detrimental, not only for business, but as well for democracy, when wealth is concentrated in the hand of very few. Another topic we will discuss today, beside simplification, is about incentive for investment. We have learned, as well from the United States, a good practice of tax credit. This is one way, in particular for startups, to foster competitiveness, to push innovation, and then to get economic growth. Finally, we will turn today as well to an issue that may appear less politically polarizing, but is nonetheless critically important: closing the VAT gap and strengthening revenue collection. In 2023, the European Union lost around 123 billion euros in VAT revenues. Last year, the European Parliament had the honor to welcoming the European Chief Prosecutor, Laura Kövesi, who reminded us that closing the gap, the tax gap, is not only about protecting public finance, it is also about preventing crime. VAT fraud scheme allow criminal network to launder illicit funds, sometimes linked to serious crimes such as human trafficking, corruption, and human rights abuse. Addressing these gaps is therefore not only an economic necessity, it is also essential for protecting the rule of law and defending victims. When we discuss taxation, we are not engaging in abstract or purely technical debate. The choices we make in tax policy have real consequences for our economy, our society, and the strength of our democratic system. I therefore look forward to the discussion ahead and to the insight that our distinguished speakers today and tomorrow will share throughout the panels. I speak here today in the belief that despite our diversity, our perspective, we can and must find common ground in the interests of our society. Thank you to everybody for being here.
Thank you, Mr. Tridico, for these very inspiring words, and might I add, your everlasting willingness to move the European tax system further and to make it better and more fairer to everyone involved. And everyone has to pay taxes. That's something we all know, so we're all concerned. Thank you up front. And then now, ladies and gentlemen, the second co-host of today, Mr. Gerasimos Thomas, Director General of the European Customs Union, and of course, taxation. The floor is yours.
Thank you, Thierry. Okay, so good afternoon, all of you. I have a bit of a cold, so I will not be long. And I have to speak 4 times the next 2 days. So I will say more on the last day when I have to conclude after listening to you. But I think it's a pleasure to see you after for the 4th time after the first tax symposium in 2022. I think we are both in the Commission and in the Parliament and in the Council encouraged to see a very high participation coming back. We have certainly not solved the issues, that we set out to discuss starting in 2022, with main focus on the EU tax mix in 2040, looking at the long term before tackling issues in the short term. And the agenda of this tax symposium has increasingly adapted to the realities of the time, with short-term issues, mixing up with long-term considerations. I think it is very important to keep the long term in mind. Taxation policy is probably the only EU policy that does not have a mid-term perspective, and we need to do that. So the 9% participation by universities is very low. I think we need people who think more long term going forward, to keep the balance with the short-term challenges that we have. Geopolitics provide an additional challenge in this current year. We have 2 days ahead of us. Today it is made in this venue, and tomorrow in the European Parliament. I want to thank the FISC Committee and Pasquale Tridico in particularly for his leadership, and also for the Parliament arranging to have more than 50, I think around 60 national parliamentarians participate. We need to bring the tax debate from the European perspective close to the national parliaments as well. You have the program. I think you know the issues. I think we need to tackle at the issue of inequality and growth. That is one theme that we have to discuss today. The simplification you saw in the Slido, complexity is the biggest problem of the tax systems, I think I would say, of the member states, not only of the European taxation policy, but the tax system is very complex. In fact, it's 100 times more complex at the national level than it is at the EU level. And I think we need to tackle this. And I think we need also to keep an eye on international taxation. Companies, corporate taxation, personal taxation, everything is international. So we need to keep an international angle to that. And of course, we need to look at taxation as a support measure to other policy objectives like housing and savings and investment union, how to match other policies and influence behavior. I want to thank my team in DG TaxSud and the team of the Parliament that have organized this. I think we will have an opportunity to listen from a lot of speakers, get knowledge, and hopefully get out of this 2 days debate with a lot of wisdom for more medium term and more common sense. We don't need much more than common sense, going forward. Thank you very much, and looking forward to listen to your debates. Thank you.
Thank you so much for someone having a cold. Those were very wise words indeed to mention to all of us today, and we're sure to give you some extra, maybe tea, green tea, or maybe lemon juice over the coffee break to make sure that your voice is okay for the next 2 days, because we want to hear more of you over the next 2 days. Now, ladies and gentlemen, I will need your involvement for the next part. That means that we're going to split up in 2 parallel sessions. Most of you should still remember the session they've signed up for. For the people back home, it's actually really easy. You go back to the main event website, and then you click on either one link, whether you want to join in session 1 or join in session 2, and you will be able to follow both sessions. For session 2, please give them a few minutes to actually go into the room, so you might see a screen popping up and you might want to wait for a little while. For the people here in the room, you're going to be busy because half of you can stay here, the ones that are here on the Mezzanine for the first parallel session. The other half, I'm going to ask you to make your way to the Minerva room. The Minerva room is actually the one where you entered. Upon entering, you turned right to register and give your code. Most of you probably did, because although it's sunny outside, it's quite chilly. Next to it, you will find a big room. Doors will be open. They will be there to guide you towards the room, and the panelists will be waiting for you over there already. So that's for the second session, simplifying the EU tax systems to reduce compliance burdens while safeguarding revenues. I will let you leave the room first, because since it's simplifying the EU tax systems, that means you have a lot of work to do, so you'll need all the time that the session has provided for you. So you could just actually make your way down the same way you came up and move to the Minerva room. For the other people that are here today, you are in session 1. And I kind of blocked my colleagues because they were waiting for me to finish speaking for the setup of the stage. So we'll turn around the stage. And that is, how can taxation support growth and innovation? As we said, a major topic as well. So those people who have signed up for that session can actually remain here. You can remain seated where you are, or if you want, you can come somewhat closer, because you'll see we'll have some gaps already in there, so to allow them to fill up the gaps rather. Colleagues are installing the scene in order for the panelists to take their seats. So I will kindly invite Mr. Marc Lemaitre and the 4 panelists of the first session to come to the stage and to join me on stage for their very first session. Thank you so much. And so the other people to the Minerva, you can make your way down, cross the beautiful room, and take a seat in the Minerva room for the session number 2 that you're going to join. Any preference? Moderator can choose on the left or the right, and then the ladies should take their seat first, please. Have a seat, you'll find microphones. People in the room you'll be able to do, and people back home, you'll be able to give questions through the side of the system. If there's time enough, and there should be, for question and answers, the moderator will take up with some of your questions. Depending on the number of questions, we might go through all of them, or if there are too many questions, of course, a choice will have to be made by the team and the moderator. Is everybody ready? I guess so. Everyone is on stage. Please take a seat. The floor is yours to introduce the wonderful panel you've gathered here today. Thank you.
Thank you. Thank you very much. A very good afternoon, everyone. And thank you for being with us, whether here in this very well-filled room or online. It's my great pleasure, indeed, to introduce the panelists that will be stimulating us this afternoon. And I would start with Mr. Jussi Saramo. Mr. Saramo is a member of the European Parliament, where he coordinates the work of the Left Group in the Economic and Tax Committees, and serves also on the Committee on Industry, Research and Energy. This places him at the heart of current debates on how fiscal and industrial policies can reinforce innovation and growth. Next, I would pass to Mr. Jörg Kukies. Minister Kukies is a German economist and policymaker with extensive experience in international finance and economic governance. He most recently served as German finance minister, and before that as state secretary at the Federal Chancellery and Sherpa to the Federal Chancellor for the G7 and G20. He thus brings valuable knowledge of both national fiscal management but also international policy coordination. I now turn to Mr. Scott Levine, who is a US tax partner with Baker & McKenzie, and prior to that he served as Deputy Assistant Secretary in the US Department of the Treasury, where he led work on international tax policy, treaties and cooperation under the OECD G20 inclusive framework. Thank you for traveling from the US to join us here today, Mr. Levine. Your insights and experience from the US will no doubt enrich our discussions. And last but not least, Ms. Veronique Willems. Ms. Willems serves as Secretary General of SME United, the association representing Europe's crafts and small and medium-sized enterprises. With 25 years of experience in the business advocacy and SME counseling at local, national and European levels, she brings a grounded understanding of how policy choices affect SMEs in their daily operations. A very critical perspective indeed for today's discussions. Now, for me, being Director General for Research and Innovation in the European Commission, it is obvious that the topic that we will be discussing today, how can taxation support growth and innovation, lies particularly close to my heart. In fact, it is quite a critical matter. If we zoom out and look at Europe's economic situation, I think that what is clear is that we will need abundant tax revenues going forward in order to be able to face our needs. And for that, we will need more powerful growth than we have seen over the past decades. And again, for that more powerful growth, we cannot exactly count on demographic dynamics, rather to the contrary. So we must bet on raising productivity growth, trend productivity growth, and therefore we must double down on research and innovation in order to boost our technological prowess. And so we must ask ourselves, are we creating the right environment in Europe for innovation in particular to grow and to scale? We know we have a scaling problem in Europe. If you compare Europe to the United States, very few companies of significant size have been created over the past few decades. And what is the role of taxation in all of this? Well, well-crafted tax policy can lower the cost of innovation, attract private investment, and steer resources towards our strategic priorities, like clean technologies and digital leadership. Take the Clean Industrial Deal, and in the US, the Inflation Reduction Act, I guess, quite similar approaches. It is an example of how targeted measures, such as accelerated depreciation, immediate expensing, and innovation-friendly tax credits can drive private investment into green technologies, digital transformation, and industrial resilience. But incentives alone are not enough. We need a coherent and innovation-friendly tax environment across Europe. Having said this, it is really high time, I think, now to turn to our panelists. And I would like to start with a relatively broad question with, as a backdrop, a stark reminder for Europe. Tax policy has moved from the background to the front line of innovation strategy. In many EU countries, tax incentives now account for over half of all public support for business R&D. This said, business R&D in Europe remains at less than 1.5% of GDP, much lower than in the US, in Japan, in South Korea, or even in China. So the general question I would like to start with is, how do our panelists see the role of taxation in supporting growth and innovation in the EU, and what are the key principles that policymakers should follow to make tax systems growth and innovation friendly? And Mr. Saramo, might I start with you?
Thank you. I think what we have been talking already, listening today, I think we have very similar common goals, but we have very different ideas how to achieve these goals. And I think the main question is, should the taxation be the tool? And personally, I think I don't think so. Actually, I was a minister in Finland, and before I was working for a government already 2011, and we were trying these incentives to the R&D deductions, and it was not working. These companies, they were mainly having inventions of tax planning and not inventions how to make their normal business better. I think we have a lot better tools than taxation. Of course, taxation is very much connected to this topic. The money we collect from the taxation, we are using education, we are using to infrastructure, we are using for many issues that are key issues actually when we are trying to build growth. I think the more complex tax system we have, the more it benefits the biggest companies that might be lazy, that are not maybe the most innovative. They have the means, they have the resources to hire tax specialists that the small companies don't have. Actually, when we talk about startups, scale-ups, they are not making any profits that they would pay taxes off. Actually, they are trying to, their dream is to make big profits in somewhere future, but that's a different thing. They have the means, the big companies, they have the means to fight in the courts and justice system and take risks that small companies cannot do. So we can see in the statistics that the bigger the company is, these multinationals, they are the ones that are benefiting from all these exceptions and different kinds of tax rules that are, when we're drilling holes to the tax base, that I think should be broad as possible. Also, I think we should ask what kind of growth we need. Of course, we can try to use taxation as a tool to have digital growth or growth to foster the green transition. But I think also in this field, the other tools are way better than taxation. Because not all the growth is good. There are a lot of bad growth in the world of climate change. We need, in Europe, we need, in the world, we need green transition. And compared to US, of course, we are lacking in the digital side. But what we can do, we have a lot more other tools. We can be much more specific than the tax tools usually. When I met the people from the startups or the scale-ups, and I asked them, what's your problem? What would you like us to do? Or why are you going to Silicon Valley? Why aren't you staying here? Taxation never is the answer, what they give to me. Actually, as I said, they usually don't pay taxes. Actually, they think that the European society, usually they think it's so much better than the US, sorry. We have the quality of life here is so much better. Silicon Valley is not a nice place to live in many ways, but they go there because everybody else is there. And this is the main issue we have to tackle. And I wonder that if we are just concentrating on the taxation, if we are concentrating on the wrong issues, then we might do more harm than we are finding answers. Just very shortly what Pasquale was saying, which I agree a lot. We have a problem in taxation also when we're talking about growth and innovation. We have 27 different tax regimes now. Now, when we have the 28, or if we have more complicated tax rules, I think it's not going to help us. It's going to make it worse. I think we need European rules. We need global rules, OECD, maybe even UN tax convention. That Europe is not very active. US left the whole discussions. We need international rules that we can have more stable and more simple tax system, and we don't more competition towards bottom. And then very shortly only about IRA, which I actually think, which was a good, and I'm very waiting to hear more about it because IRA was great in many, many ways. But here we can see this, how complicated it is to do. We cannot do this in Europe. We don't have common fiscal policy. So if we only have some common tax tools, it's like only 1/3 of the whole thing. And this is like, we need Europe where we could do something similar to an IRA, but I think the taxation cannot be the one we are starting from. And sorry, I talked too long. Let's go to the next speaker. Thank you.
Thank you very much, Mr. Sermo. Very thought-provoking. May I turn to you, Mr. Cookies?
Yes, sure. And I would say I just was co-author of a report with Christian Oyer on exactly the question of how to finance innovation and growth, especially how to bridge the lack of scale-up companies that we have in Europe. And I would say in the roughly 100 conversations that we had with companies, their employees, and their investors, we did receive quite significantly different feedback to your statements. Taxes matter. Yes, I agree. Many other things also matter more, are maybe more relevant. Lack of capital markets-based pension systems in Europe as a source of equity capital was mentioned very often. The overburdening with regulation, which was seen as prohibitive in Europe in many cases, too much red tape, too long approvals processes, the interaction between the AI Act, the GDPR, which means that a lot of the AI development is not happening in Europe but moving to the United States. All of those things were mentioned predominantly, but taxes do matter. And I would say, just to summarize it quickly, from the feedback that we had from our conversations, taxes matter from 3 constituencies. The first coming from the employees of startup companies, whose biggest source of income and their biggest driver to self-select to a startup or a scale-up company rather than a large corporate and established company is their hope that their income will be heavily positively correlated to the success of the company, in which they receive equity as a compensation and an incentivization for long-term commitment to the company. And in the case where a liquidity event, i.e. an IPO or a sale happens, they will be compensated. And for that, the European tax system is simply not set up for the task, both qualitatively and quantitatively. The vast majority of European member states where we heard, contrary to the United States, has the sort of this so-called dry income phenomenon, i.e. an employee comes to join a startup or scale-up company, receives equity, and in many European member states, immediately they will receive a letter from the tax authorities saying, congratulations, you just became 100 units of money wealthier, please pay us 20, 30, 40, whatever the going tax rate is, immediately. Then for the employee who receives an illiquid share but has to pay taxes, has an immediate dilemma, and that is the case in many European member states. So that is problem number 1. The answer that we received, please harmonize, please make your national tax system such that the taxation happens only when profits are actually realized, and if losses happened, please make those losses eligible to count against future income. The second big problem for the employees is, from a corporate perspective, that if you are a scale-up that wants to conquer 27 markets in the European Union, you essentially have to set up 27 different employee stock option programs, which is clearly not the case. That was always mentioned to us in the United States. So that's from an employee perspective. From the company perspective, you have a similar issue that your corporate taxes are massively different in all 27 countries, so that if you're a young company that wants to conquer 27 European market, the fixed cost of establishing yourself in all countries from an administrative tax, corporate tax angle is very, very high, and that is irrespective of the fact that most of the companies aren't paying taxes, but still you have to get license to operate, so you have to set yourself up from a corporate entity perspective. So we're very hopeful that what the European Commission is now planning with the 28th regime and the possibility to set up a company under a harmonized set of rules in all 27 member states under the 28th regime will also help for that perspective. And of course, many corporates said to us that the US system, US idea, and the system of tax credits is much more helpful for young companies that are set up to make losses for many years before they turn profitable. So that does matter from a structural perspective. The last point that we received from the investors as a third pillar point is our European system of withholding tax administration reclaims is enormously burdensome, enormously bureaucratic. Faster received very good reviews, so many thanks to the European Commission for pushing that process, but many investors told us that despite the progress through Faster, we are still light years more complex, more complicated, more bureaucratic in all of the cross-border investment gains and loss offset treatments to the United States, which then is one of the many aspects why our common capital market is less liquid, less deep, less efficient than the markets in the United States. China, India was also mentioned as examples where other regions of the world are more efficient than the European Union.
Thanks very much, Mr. Cookies. Very concrete examples from different perspectives, indeed. Mr. Levine, can I turn to you for perhaps a different geographic perspective as well?
Sure, and first I just want to thank everyone for inviting me, especially Gerasimos and his team. It's a pleasure to be here today. So the U.S. does have a different perspective, and I think in the U.S., with all of the nonpartisan or partisanship that we've been feeling over the last multiple decades, the one thing that there is some bipartisanship on is the treatment of multinationals and in particular incentives to multinationals. So, but before I even get there, I think tax policy, before it can even have a discussion about what is the right or wrong type of incentive, it's important to know that tax shouldn't be driving the innovation. There are other things that need to be in place first before that can take place. And so those are things like a really skilled workforce, deep capital markets, regulatory stability and predictability, and strong IP protection, and the list can go on. But in essence, an environment that can be helpful to stimulate innovation. Once you have a market like that, and I would suggest the US has a market like that, then you can start talking about tax policy and what it can do to really fine-tune and drive innovation. So I do think that the current situation in the EU does create real barriers. We've heard already a lot about the regulatory fragmentation that can take place. 27 member states, each with their own set of rules, and then on top of that, some additional European Union-wide rules. And I think the issue here really is the fragmentation. It's not necessarily the top-line tax rate, although in some jurisdictions that is quite high, comparatively speaking. The other thing I think is important is I'm going to talk a little bit throughout this panel about really the span of the U.S. experience over the last 2 decades. It's been a pretty rocky, or I would say a severe pendulum swing back and forth. And the one thing that is most important, I think, to good tax policy, before you get to the specifics, is stability. So if that tax policy can remain in place for a long period of time, that incentive can take place last for a long period of time, then we're looking at a circumstance where investors, businesses, employees can invest and make decisions that they know will not be changed in a short period of time. And if you look at that kind of spectrum in the United States, we've had a pretty severe pendulum swing. We've had pretty broad supply side incentives and reforms, mostly with the first and second Trump administration. We've had targeted sector incentives. In particular, we heard a little bit about the Inflation Reduction Act or the IRA. and its attempt to stimulate significant and rapid growth in the green energy sector. We've also had some bipartisan efforts, so whether it be qualified small business stock, which you'll hear more about when I have later on in this panel, which I think is a really important incentive that there is bipartisan support on. Or we talk about the permanent R&D credit, again, which is broad US bipartisan support. We'll see that these have a real impact on the ability for companies to make long-term strategic decisions. A few other points I'll just briefly mention. I think when it comes down to what the US experience should really mean to those in the EU who are making these decisions, the first thing is that, like I said before, stability matters a lot more than generosity. You can have the most generous of incentives, but if it's only around for a year and then it has to be re-upped by another vote or another review, then it's hard to make long-term decisions. You can have a milder or less intense incentive, and that incentive that might be there for 10 or 15 years can have real staying power. The next thing that we heard a little bit about is complexity versus simplicity. We've had experiences in the US, whether it be our CAMT or our corporate alternative minimum tax that was passed during the Biden administration, or our GILTI, our global minimum tax, as well as some other rules that we have that are unbelievably complex. They were clearly designed for almost the largest tax multinationals in the world to be able to afford an in-house group to be able to even comply, let alone plan. And so small and medium-sized enterprises will have a really difficult time complying with these provisions, and in many cases just don't take advantage of incentives that are available to them. And then lastly, I think it's important that whatever you all decide to do, you need to make sure that pre-revenue companies can take advantage, and that has to be a non-negotiable part of your package. If pre-revenue, or in essence, startups who will have losses for a long period of time, if they can't take advantage of these incentives, then what will ultimately happen is the largest companies will continue to get larger, and the small and medium-sized companies that really will be the lifeblood of the next generation of businesses won't be able to get off the ground.
Many thanks, Mr. Levine. Can I now turn to the representative of the SME sector, Ms. Willems?
Thank you. Yes, I think that it's very clear, and I think Mr. Levine already did a good introduction on the SME part. Keep it simple, make sure that they can also access the incentives, because otherwise the bigger will get bigger and the small ones won't be able to use the funding that is potentially directed or targeted for them. First of all, SMEs need stable and predictable tax design. That's one of the core elements for small companies, that it doesn't change all the time, as you mentioned, that it's also a bit predictable. Then taxation is also broader than only company tax. I'm gonna get into that later on, but you can provide tax incentives to citizens that can incentivize them to invest in innovative companies. So that's an element that I think we should certainly not forget. And then we have to make a balance between, on the one hand, providing tax incentives, and on the other hand, also ensuring fiscal stability in the European Union. And that's a balance that you have to reach in the medium to long term. If I look at the principles that from our point of view, from SMEs, would be put forward, we first have effective tax incentives. I don't have to go into detail too much because it has already been mentioned. There are several tools that you can use, but for small companies, the most important thing is making sure that they can access those tools without too much misery. And that also goes for the everyday entrepreneurs, as they've been once called, and not only startups, because it's important that small companies who are innovating also have access to the necessary incentives. Secondly, a shift in tax base, shifting away from taxes on production towards more taxes on consumption, taxes on environmental externalities. A third point has been mentioned already a few times, harmonization. For small companies within the EU, it's really burdensome if you want to go cross borders, as you mentioned as well, and you have to adapt to all those different systems. That's taking away time from doing business and doing innovation to the paperwork. And then a last element, which I think is also very important, is the effective spending. We have tax revenues. How do we spend them? To what do we spend them? And for us there, it's really important that tax revenues are really invested in growth-enhancing measures and not just spending for spending. So as you mentioned, education is very important, infrastructure is very important, and that will also have an important impact then on how SMEs can profit from the taxes they pay. That's what I used to say when I was at regional level, explaining tax incentives to SMEs. You're paying taxes, make sure you also recuperate as much as possible by using the incentives that are available to you.
Thank you very much. Thanks to all for this insightful first round. I would suggest to dive a bit into some of the topics that you have referred to, and starting back with you, Mr. Seramo, as you had well, quite clear statements on why you thought that generally taxation is perhaps not the right tool here. But if we look at the OECD trends, in fact, tax incentives are today more generous than they have ever been. And over the past 20 years, implied tax subsidy rates have in fact doubled. So thinking again more specifically about tax incentives geared towards innovation, would you see any room for tax measures which would find favor in your eyes?
Well, if I'm trying to watch this from very far first, if we see the golden age in the Western countries after the Second World War, until Reagan and Thatcher started to disrupt the welfare states, when we had the biggest growth, when we had the, like people were, I'm coming from Finland, we are still considered as like, well, the happiest country in the world in almost all the research. It was also good for companies. It was also good for innovation in many ways. What we are having now is the race to the bottom. And all these tools are usually used part of the race to the bottom. If we go to this golden age after the wars, the companies, they were paying 45 to like 50% of their profits in taxes. Now, the biggest companies in Europe, they used to pay zero because we have tax havens of our own. Ireland, Netherlands, many countries. Well, now we have OECD, we have BFIT, we are trying to fight this, but still, I think if we have kind of a basic, like we have a line. Oh, in 1975, EU Commission said that the corporate taxation should be from 45 to 55. And then the states could decide between these two. So if we have an effective rate, whatever it is, let's say it's 30 or something, and then we can use different tools top of that, then I think we could achieve a system where we can gather, where we can have enough taxes that we can pay the welfare state. But now I think we are in a situation when all these holes in the tax base are just ways to get rid of paying taxes and actually not motivate. Nobody's having a company on the idea, nobody's innovating on the idea that I want to innovate to get rid of taxes. And that's like, I think the basic point that we need the global rules. And if we have the global rules, after that, we could build something on top of them.
So you don't really buy into the notion of positive externalities and the fact that there might be underinvestment in innovation if there isn't some kind of public incentive?
Well, in Europe we can see that we have a very bad investment, like we would need to invest so much more. But we also need that these investments don't happen without public money, without public procurement, without public infrastructure building. You know, the trains in Germany are not working, like nothing is, and it's not just Europe, I think it's US, it's the whole Western world that we really need to invest. But how can we make sure that the investment goes to common good, to tackle the climate change, and what I'm seeing now, the discussions about growth and innovation is something else that what our societies really need.
Thank you very much. If I can go back to Mr. Levine, you already gave us quite a few hints at what might be working better. With your experience from the US, which uses tax incentives quite extensively and sometimes indeed in a bipartisan way, can we perhaps go into a bit more detail based on the general precepts that I noted down: stability of incentives, simplicity, pre-revenue companies that must benefit. You referred to the permanent R&D credit. In all honesty, I don't know how it works in detail. So what would you highlight as good examples from the US, which we might get inspiration from, and perhaps some pitfalls that we should avoid?
Yeah, so let me start with some of the good stuff, and then we'll get to some of the problems that we've seen over the past several years and decades. So the first thing I would say is scale and speed of capital mobilization. And we have some really good examples of that. I think the best example, maybe in the US history, is the Inflation Reduction Act and its ability to get incentives very rapidly out to the companies that we want them to use. And so a few things I would just say there is, when this happened, we were able to get something to the effect $370 billion of incentives, and that was able to draw multiples of that from the private sector. And it was able to be done in a pretty rapid period of time. And I think that the reason for why this was so successful was, rather than having a process where the government has to approve a particular subsidy through a lengthy review process that ultimately is going to be picking winners and losers in any event, this system was designed to allow the money to flow quickly through tax incentives, through the tax system. And the way it was able to do that was through a series of mechanics that allowed companies who had tax capacity. These are not necessarily companies that are in the industry that was to be incentivized, but had the ability to use the credit to offset its tax liability, for them to basically stand in as the judge to whether something or not worked, or else they wouldn't invest in the arrangement to begin with. And its second thing it was able to do is it didn't require there to be a sophisticated investors only that could get access to these tax credits or synthetic tax credits, but instead it enabled it to be done by any investor who all they had to do was, in essence, sell their tax credits to a party that could use the benefit. And I think there's some parallels to the clean industrial deal that was mentioned earlier, and hopefully that can get off the ground. Another positive lesson that I think we've learned was that direct pay and transferability, these are two things that came out of the Inflation Reduction Act, worked really well. It was these direct pay provisions, it really democratized access to the incentives. And again, it allowed small businesses, startups, to take advantage of these credits just as much as mature, large corporations. And then I think the other thing I want to just kind of mention is we had this thing called Section 1202 Qualified Small Business Stock, or QSBS. And this allows for investors to put money into new startup companies, and it allows them, if they hold on to it long enough, Historically, 5 years. Now there's a kind of, you get some of the benefit through the after the third year, and 100% of the benefit after the fifth year. But in essence, it allows you to make that investment, and if you satisfy the requirements, and these requirements are all centered around real startups as opposed to existing businesses, then the investor can then sell a percentage of that at least with no capital gains tax. You know, so at first I thought this was, it sounds like might not be that relevant, because I know a lot of jurisdictions in the EU have very low capital gains taxes on individuals. But then I looked a little further and I noticed that some of the key countries that have the highest capital gains taxes have been the ones to attract the most innovation. So that would be like the Netherlands, Denmark, for example. And they have high capital gains rates. This type of incentive could really jumpstart and accelerate investment, I think, pretty well. One more quickly on the positive. I mentioned the permanence of the R&D credit. And we have this new concept of a payroll tax offset. Well, there are concerns about our fiscal stability going forward and what this has done to our deficit, and put those aside for a moment, which are hard to do. But this permanence has allowed investment to take place in R&D and has allowed large and small businesses the ability to bank on that being there for a long period of time. Now, nothing is permanent in the United States, and putting the word permanent on it doesn't make it so, but this happens to be a bipartisan effort, and so it's not likely to go anywhere. Quickly, some negative lessons, I guess. Number one, our R&D credit had an amortization kind of booby trap, so to speak, where the US, and this is done for budget reasons, both sides do it, it's I think not effective or efficient, but both sides were able, and in this case, Republicans were able to pass the Tax Cuts and Jobs Act by having certain provisions expire within the 10-year period. And what that did was as we got closer to that 10-year period elapsing, we actually saw the investment slow down. This is both for large and small businesses alike. And now it's been made permanent, and that isn't there, so at least there's no concern about a requirement that something be addressed. But it does you still don't know whether a next administration, maybe with different priorities, decides to prioritize other things and take some of that away. But typically, when tax incentives are made permanent, they're hard to take away. Another one that I think is important is that if you target a specific sector, and that sector is politically viewed as a political type of issue. So for example, in our green sector, where historically Democrats have been more willing to take efforts to combat climate change, and Republicans, I think, have not, or maybe don't think there is anything as climate change. We had like I said, the tremendous success of rolling out very quickly incentives for the green credits. But because it was a specific sector, and because that sector has been politicized, there was concern that it would be rolled back. And so we saw the investment drop precipitously as it came up to the election. When President Trump won the election, we saw even further drop in those incentives, taking advantage of those incentives. Some of them ultimately survived. And this was largely because they affected red states as much as blue states. And I think if we can find a lesson here, the lesson would be to make sure whatever you do is broad-based, there's consensus, and that the small EU states are just as interested in this incentive as the larger economies in Europe. And I think one last thing I'll just mention is nonconformity. So the US has a federal system. Our state system is maybe more akin to the EU in that sense, and we know that significant jurisdictions don't conform with, large states don't conform necessarily with the federal rules. Our small business stock is a really good example of that. Our exception that I mentioned before, while available at the federal level, many states also piggyback off that rule. But there's one state in particular that doesn't, that's extremely important in the startup world, and that's California. And so there is, in essence, 10% that's lost as a result of California not following the small business. So I think going forward, what can the EU do and what should it do that would be a little different? I think you have to harmonize to the best you can your implementation across all member states. I think you have to build some kind of permanence into this, and you have a built-in advantage that compared to the United States, where it's very difficult to pass tax laws. So when you do, they should have staying power because they'll be just as hard to repeal. And then I think it would be I think personally a really good idea to try to mimic some of the incentives we have, especially R&D and especially small business stock. I think those have been proven over the last decade or so to show really where money has been flowing, where these incentives are available. And if you look, and I mean, these are just numbers that you just mentioned, there have been virtually no large tech companies, for example, coming out of the EU, and I don't think it's an accident. We're seeing money, great ideas coming out of the EU in the beginning stages, and then those companies fleeing to California, Silicon Valley, Seattle area in order to grow their companies, and that needs to change.
Thank you very much. Ms. Willems, you referred early on to the need for incentives or schemes to be predictable, simple and effective for SMEs. Now, taking in particular the perspective of innovative SMEs and ones which have ambitions to grow, what do you see presently, perhaps, as unhelpful tax features today, and how would you like to see them changed to improve the scaling up possibilities across Europe?
Yeah, thank you. I would like to build further on what the MEP before said, with nobody gets into innovation to get rid of taxes. That's right. But on the other way around, a company that is considering innovation, investing in a new innovative product or service or business model or whatever, might have to make the decision between going ahead or not going ahead because of the profitability and the return on investment and how many cash they have to invest to get it to be profitable at a certain moment. And when you can deduct the cost once, or you can deduct it 1.5 times, that might have an impact on the return on investment and how quick there is a return on investment. And in that way, the company might have to decide to go ahead or not go ahead with that innovation. So in that perspective, taxes do have an impact. And of course, the company will not decide to innovate because of a tax deduction, but the tax deduction might give the additional push to go ahead and be able to finance it, yes or no. So that's a bit, I think, an element that we have to take into account. And then I also go to the element of the permanence. If you have been investing in an element, I'm thinking about R&D staff, for instance, and you have had an additional tax credit for that R&D staff, that's an element you take along in your profit and loss account towards the future. How can I continue working or not? If you know that at a certain moment that is going to lapse, you will have to assess, can I continue this investment, or will I have to refrain to be able to move forward in a profitable and in a solvable way towards the future? So those are all elements that do play a role. And those are also elements that play a role in barriers and positive measures for small companies. The first thing that was mentioned already a few times is those different corporate tax regimes. I can only positively comment on the Commission because you've certainly made efforts. You've proposed CCTB, you've proposed the HOT, the head office taxation regimes. Unfortunately, member states are still not moving forward with those systems, taking away that big barrier that small companies and also large companies experience when they want to work cross-border in Europe. I don't think we have to be hopeful on the 28 regime, because in discussions I've heard labor and tax issues would be not part of that regime. So in that perspective, we're also quite realistic on the side of small companies that that's not going to bring any solution either. A second element has been mentioned already a few times as well. Startups, but also small companies in general who invest, often for a few years do not make any profit. And so a tax reduction on that year wouldn't bring any incentive or support So you need to make sure that you can take it over to the next years when they do make profits. And then final element that is a barrier, which we've been pushing a lot on as well in past few years, and which was also an element that I've already learned when I was still studying, was small companies depend heavily on bank lending. There are several reasons for that, but one of the important reasons is that in corporate taxation, the loans can be put in fully, whereas your equity is not being taken on board sufficiently. The proposal of the Commission on the debt equity bias reduction allowance has again not been taken up by member states, and that's a very unfortunate element again, because that would allow small companies to build equity, to be stronger, to persist through a longer time of innovation. So those are all elements that are barriers for small companies at the moment, where work has to be done. Then if we look at positive and supportive measures, I would first say accelerated depreciation, so that they can move faster in depreciating and move forward. The second element is tax credits in combination with refundability or carryover, as I just mentioned, towards years where there is a profit. And then a last element is partial deduction of dividends, or allowing for corporate tax losses to be carried forward to incentivize investments for SMEs by institutional or individual investors. And there I also make the link then again with the income revenue tax for the citizens in general. If a citizen want to invest in a small company and they want to take a risk there, you could set up tax incentives for the broad public, that they get a reduction on the amount they invest each year in their tax submission, and that when the company would fail and they don't get part of their money back, that they also get a reduction on the part they lose. That's a system that has been broadly used in the Netherlands a while ago. That's a system that is being used in Flanders. I think it's a system that is used in several other member states. And that could again also incentivize more investment in small companies and more investment in innovation.
Thank you very much. Well, you referred to the 28 regime, which should come out in 2 days' time. So I think this is a moment when we can still, dream about its ideal shape. Turning back to you, Mr. Cookies, and indeed with your very insightful joint report with Mr. Noyer in mind. What would you like to see in the 28th regime proposal intrinsically from the tax point of view? What would you see fitting in there?
Yes, well, I mean, just some basic principles, because obviously it's a debate that can fill 2-3 hours in and of itself. So I'll only speak about a few of the core elements. So first of all, we need true pan-European status. The SE is not a good example because the SE has two deficiencies for small growth companies. First of all, its size requirements are too high for almost all of the startups. Some scale-ups pre-IPO start reaching those thresholds, but for the broad SME sector, the SE is not an accessible legal form. The second is that the SE is called European society, but in fact it's not very European, because setting up an SE means essentially you need 27 different you need to adhere to 27 different rules and regulation on all sorts of things regarding incorporation. So it's not a Delaware type of system where one registration means you can start operating across the full internal market. So I think it needs to be A, accessible for smaller companies, B, it has to be both pan-European. And now comes the difficult part. Of course, the ideal requirement from everything that we heard from the companies that are in this process of growth is that as many aspects of their corporate relevance are encompassed into the rule. So you mentioned co-determination, labor rules. Of course, most companies say it is very complicated in Europe to set up operations cross-border because all of the rules and regulations regarding labor relationships, co-determination rights are completely different in all 27 countries. However, we also heard feedback that touching this topic is so delicate and so sensitive and so controversial that the easiest way to make sure that the 28th regime never gets agreed upon in the European Council, the European Parliament, the trilogue, is to make it too all-encompassing. So I think reasonably you will need a compromise between touching the relevant areas, but also making sure that the scope is such that you actually have a chance of getting it done within a year or so. So I think that's the political compromise that has to be reached. The question on taxes is similarly complicated because I don't think anyone believes that we will have one uniform tax regime that is the same for all companies across where they operate. In fact, we heard from a lot of Silicon Valley investors that that's not the case in the United States either, because the United States has state taxation rights, even municipal taxation rights. So it's not like you need a complete, like harmonization of all tax elements. But what I mentioned about the employee stock option programs, I mean, that was mentioned by almost all companies that are moving from the SME status to a pre-IPO status where equity allocations get bigger and bigger and more relevant to attract talent. You really need a system that allows you to set up employee stock option programs in a scalable, easier, less administratively burdensome way. You need a common principle across 27 member states. What I mentioned about dry income is that you will only start taxing when the employee actually makes a gain and not when they get the allocation. So I think that would be enormously important, that while tax rates will be different across member states, the principle is harmonized to the highest degree possible across the member states. I think that would be an enormous breakthrough and would achieve a lot of motivation and incentivization. And of course, again, the whole question of capital taxation cross-border, enormously important. The debt equity bias and giving a more positive consideration to equity. At the moment, almost all of the 27 member states privilege debt over equity issuance, and it's no surprise. If you look at the history of the $7 billion companies in the United States, in Europe it would be trillion-dollar companies, they are all based of a history of predominantly equity financing, because their business model is very heavy on intellectual property, on intangible assets, and less on pledgeable assets with which you can raise bank funding in all of their history. Now that they're generating huge cash flows, now they can issue debt. But the problem is, in Europe, while the young companies are in the equity phase of their existence, they don't benefit from all of the positive treatment that debt issuance can have, because their banks tend not to lend to them, and so the equity financing is definitely, for the young and growing companies, something that needs to be similarly privileged as we are implicitly privileging debt issuance.
Thank you very much. I see that the clock is running down and we have only 8 minutes left. I think it's high time to check with the room whether, on the basis of all the interventions, you would have some thoughts and questions. I see one hand up here.
Hello, thanks for the discussions. I'm Lauri Finner. I'm the director of Helsinki-based think tank, progressive think tank Kalevi Sorsa Foundation. I want to go to very basics because when you go to a tax policy course at the university, when you discuss what is the purpose of taxation, the first purpose is actually raising revenues to fund government. And in European social models, there are of course very different ones. But for example, in Nordic model, where I come from, this is even more important since if you to fund a Nordic social model, you need even more tax revenues. But then when in a discussion, when you discuss taxation and growth, you directly go to often discuss about tax incentives. But personally, I have had the understanding that if we want to enhance growth, you should first begin looking at what is the most effective tool to do it. Taxation is just a tool, and of course there are very different ones. And in the problem with the European, especially the continental legal system, is that it limits quite a lot compared to the US system. Actually, how taxation can actually be used as a tool, because tax laws have to be defined very strictly in law, and it limits using tax credits. So from this perspective, I would like to ask a question. What do you think actually is the role of taxation in enhancing growth compared to other tools? Because there is this controversial issue that if we tax less, we have less revenues for subsidies, whether there are tax subsidies or tax credits or spending side subsidies. So what is kind of compared to other tools?
Anyone you'd like to address the question to? Or
maybe Jussi already answered, so maybe
someone else than your compatriot. Okay. We'll keep that in mind. I had a second request here. Short question, if possible.
Yeah, of course. Miguel Costa-Matos, Member of Parliament from Portugal. And the question is to Levine. Great discussions here. You mentioned the benefits of stability and you mentioned the benefits of transferability. But of course, there are some risks, right? With stability, you can get firms that get used to having the tax credits. So they might be being subsidized for doing something they would already be doing. You can be generating an economic rent. So how do you make sure that this has additionality and not just incentivizing what is already happening? And with transferability, I guess the risk is, well, what about absorption capacity? We have a similar tax credit to one you were mentioning in Portugal, but about half of the transferable credits were left unused. And the ones that were used in businesses which were not competitive because it was free money, and you can spend free money on bad projects. How do you fix those issues? Thanks.
Thanks very much. So who would like to start on the first question? Yeah.
I can make an attempt. I mean, the problem with increasing or maintaining high taxes to maintain subsidies is that at least the startup and growth companies that we spoke with very broadly told us that they tend not to benefit to a huge amount from direct subsidies because the access to the subsidies is usually so complicated that they have a hard time. What a lot of startup and scale-up companies told us, forget subsidies, like give us a simple, fair taxation of employee stock options, give us a possibility to tell our investors that the losses that we accumulate and that we fund through their equity eventually, if and when we make profits, can be offset against those profits in the future. That makes us much more investable. That's much better than subsidies. And if the government wants to help us change public procurement rules and make defense contracts, public works contracts, et cetera, less bureaucratic, less burdensome, get rid of the requirement to demonstrate profitability and viability for 5 years. That is the biggest discriminatory instrument implicitly. Nobody has that explicitly in their rules, but implicitly that is a way where the public procurement is concentrated on the large incumbents and implicitly discriminates against small companies. So that was really a big topic, and that's why in our report we have a pretty substantial section on public procurement as a much smarter way of helping growth companies just by setting a level playing field. Many of them said we don't even need, to be privileged. We just want a level playing field. We just want to compete eye to eye, and we just want to get access to the public procurement pots and not necessarily be privileged.
Mr. Saramon, you wanted to add something?
Yes, very shortly, even though he didn't want me to answer, but actually, I said I'm from Finland. People say it's the happiest nation in the world, but Finnish people say in research that they love taxes, but there are two conditions. Other one is that everybody pays their fair share, and the other is that money is spent for common good. And now, one of the biggest loopholes, because there was a speak about equity, and actually this is very interesting. I'm sorry that we are lacking time, but very shortly, in the Finnish system, there is one of the biggest loopholes that really is bad for our economy, is that there is this, if you have an unlisted company, the company owner pays a very small, like 7% of the dividends of their capital income if they have a lot of money in the company. But these companies, they are not actually profitable. The productivity is very bad in the whole sector, in many sectors. They don't make innovations. They are only considering, they are focusing on tax planning, most of these companies. So it's a good example that if you are doing these incentives in a very good idea that we want to support the equity and the ownership, you might end up on the very bad, and this is something that Finnish people feel that it's very bad for the whole society, that there are some people who really live on their capital gains, but they don't pay their share. And I think if you want to support more equity, then you should support the company and the innovation, and not the owners.
Mr. Levine, there was a question specifically for you.
Yeah, so if I'm remembering, it's all been 5 minutes already. You want me to address both transferability and permanency and why those potentially could become stale and ineffective. So, of course, every provision, every incentive needs to be, should be, created as a result of whatever the circumstances are in that particular jurisdiction. You are right that in some cases you could have incentives that are going to assist companies that would do something that they're already doing. But I think the evidence shows, like say, take the R&D credit, for example, that regardless of how big or small the company is, when that incentive goes away or is reduced or becomes uncertain, that there's less R&D that takes place. Number one. Number two, the startup companies, the smaller companies absolutely need that permanency to be able to engage in that activity. And they are not really able to take it to plan more than a year or two in advance if they don't know what that incentive is going to look like and whether it works or not. As far as transferability and tax capacity, which I think was your other question, we've run into that problem before in the United States as well, where there's been insufficient capacity. But we saw just recently with the Inflation Reduction Act, the largest by far incentive structure through the tax code, specifically targeting a sector, and there was really little issue with capacity. And that's, I think, mainly because it was sufficiently targeted to a particular sector. That sector was growing rather rapidly, and we saw lots of companies be able to take advantage of themselves or be able to transfer it to other companies that were not in that sector but still had significant tax capacity. You do have to tailor it, though, to whatever the specifics are of that jurisdiction. And if that means that a particular jurisdiction doesn't have sufficient tax capacity, you need to find another way to accelerate that incentive to go to the right taxpayers.
I have been told that we might have a few minutes more, but can I just check whether that's true? It seems.
Hello, thank you. My name is Femke Groothuis with the X-Tax project. My question revolves around labor taxes and labor costs, because innovation is highly labor intensive. And the bulk of the tax revenues across the EU are based on labor. And I was wondering, maybe in America you've had the Americas Act, which I don't think has pushed through yet, but it is an act to also reduce labor costs, labor taxes for corporations that move into innovative fields such as the circular economy. So when we talk about small businesses or startups, they have a very, very high cost in terms of labor, but also the innovative business models in larger corporations tend to be more labor intensive if they're aligned with either sustainability, circular economy. So maybe we should talk about the barrier of labor costs rather than incentivizing or in placing tax expenditures more, but look at the labor side. Could you maybe elaborate on that?
Can we perhaps just take one last one, if there is? Any candidates?
Hi, hello. I'm coming from Lithuania, and I do have a question. Do you think that only taxation and other incentives is enough for Eastern European countries or the Baltic countries who face more threats, such as Russia on the side, and to foster the innovation and growth? Thank you.
Okay, so you might want to take the first one.
Cost? Sure. So I want to mention something I didn't mention yet, which is you've heard a lot on this panel, which are employee stock options and making them tax efficient for employees. So if you look at the most innovative countries and companies in the U.S., those companies offer qualified stock options, which are in essence stock options that are eligible for deferral. And instead of taxing it when received, they are taxed when there's a realization event. And then we also have an ability to make an election that if you're in the very beginning stages of a company and you don't want all of that to be your ordinary income in the future, you're able to make an election so you pay a little bit of tax up front to make sure that in the future, any gains will be capital gains and not ordinary income. And I think if you look at the most innovative companies in the United States, many of them in Silicon Valley and in Seattle, but all the biotech and around the country, that is the primary way of incentivizing your most valued employees. And that is in essence, a cashless cost to the companies at the same time. As far as other ways, I do worry. Like I mentioned before, that there are some ways of incentivizing companies that don't have a current tax capacity is to allow them to dip into what would otherwise be employment taxes that fund our Social Security and our national health insurance to the extent we have that. And those particular, I guess, coffers are getting lower as we speak, and I do worry about the long-term fiscal health of both the United States and other jurisdictions that offer too many of these. So there needs to be a balance, for sure, if that's going to allow companies and countries to stay stable over the long haul.
On the more specifically European geographic question, whether what has been said is generally valid for Central European countries or not. Any thoughts on that?
Well, if low taxes would be the answer, Eastern Europe would be very rich, but we can see that it's not like that. We can see that, let's say, it's not very Eastern, but it's actually very Central. Poland has been doing greatly, but I would say that it's mainly because of the public investment and a very coherent policy. Estonia, it's a good example. it's a great country with a lot of innovation. What they have been doing, their policy, I think it's been in many ways they have been doing. There is no big corruption or anything. It's like things are working. Their economy at the moment is very bad because of the situation with Russia, mainly. It's actually with Finland, it's the same. The situation with Russia it's very bad for us. So, of course, with taxation you cannot fix everything. And actually, I think the main thing with the taxation, it comes back to that the money we collect, we should use to do things that we can help the big problems that we cannot fix with taxes. So actually, that's why we need the revenue. And actually what we see now in Estonia, they are getting like they are in kind of a circle where they have to get more and more taxes, which is of course not helping because they have to have higher rates, and that's like very vicious circle. And that's why IRA, with all the problems it might have had, it's so like in the US, you can have coherent policy with fiscal policy, taxation policy, and you can combine all of this and have a very good policy as a whole. But in Europe, we are so fragmented that we are having many kinds of problems that we cannot fix, that we could, if we could have a more European policy.
Anyone else? Well, I mean, the feedback that we got from the companies that Christian Oyer and I talked to was a bit different, because the Baltics received huge praise for the ecosystem, the environment, the innovation friendliness, the digitalization of the public sector, the private sector and everything, but also the tax regime was, at least from the companies and the investors that we spoke with, the Baltics were very often mentioned as a very positive example. And one of the reasons why so many startup companies from outside of the Baltics choose to locate there, and there is so much more innovation activity within the Baltics, just on a per capita basis and many of the other statistics, taxes were mentioned as relevant. And I'll give you another example where, although, as I said at the beginning, many other aspects in addition to taxes were mentioned as key for the weakness of growth companies in Europe, one of the examples that always got mentioned in a positive way is the tax incentives that were passed in Sweden at the beginning of the 2000s with the ISK tax incentives, the investment credits, the corporate tax reforms, et cetera, and that was mentioned by many of the stakeholders that we spoke with as a massive positive momentum builder of why Sweden is doing so well today in terms of the number of IPOs, the number of innovative companies, the equity culture that has evolved and been built in Sweden. So at the end of the day, the taxes can matter if they are implemented in a coherent, long-lasting, therefore in sort of a broad political consensus way that the companies and the investors can really rely on a tax environment being present for a long term.
I think it's indeed the whole, I mean, there's not one element that's going to make the difference. Tax incentives are one element. Regulatory situation has already been mentioned as well in the beginning. So you have to make the puzzle, and it's all the pieces of the puzzle that will make whether it works, yes or no. And some pieces will make an additional incentive while others have a lesser impact.
Well, thank you very much. I do think by now, with this heavy blinking there, that our time is up. May I perhaps ask one sentence from each, which you would want us to take away from here? Can I start with you, Scott?
Sure. I think we've been hearing it a lot. I think stability and lack of differentiation when it comes to important tax provisions that will incentivize, that's the key. So if there's stability and it can be done through the EU, that's going to be the best way to ensure that Europe has a long-term glide path to being competitive again.
Okay, thank you. Jörg?
I mean, to all of the members of the European Commission, Parliament, Council, please be bold on the 28th regime. Make the scope as wide as possible, make it as ambitious as possible. I mean, that's one of the things we discussed today. Really, really important for scale-up and startup companies.
Okay, well, we have still 36 hours to listen to that. Veronique.
Well, I would say keep it simple, predictable, and stable so that SMEs can make a long-term planning, also making sure that the company can develop towards the future, as we mentioned, from a small company, a small startup, to potentially one of those unicorns that we're all craving for, apart from the ones who want also small companies to be respected if they make that choice to stay small.
And you see, finally?
Well, keep it simple. I think that's a very good topic. And then, well, I don't know if harmonization is the word I want to use, but let's say that we need to have a common ground and common rules in Europe.
Thank you all very much. I suggest a small round of applause for our very dynamic panel. Thank you so much. It was a great pleasure to be with you this afternoon. And I know we have a great, is it a coffee break to look forward to, as well after that, to an interview with Commissioner Dombrovskis. So I'm sure we will all want to stay around for that. And I wish you all a great 2026 Tax Symposium. Thank you very much.
Thank you. Thank you, Mr. Lemaitre. Thank you, all panelists. You've done a wonderful job summarizing it. I would even summarize it in one single word. It's KISS. Keep it simple, stupid. So that's what we could say about taxes. That's what we could say about many things. But that's what came up through the entire afternoon. Before you leave the room, there are a few practical things to be said. We went a little over time, which is quite normal because we had a very interesting topic. So we will meet again at 4:45, but you will meet immediately in the room of your next session. So try to keep in mind where your next session is. We have a coffee break right now. It's set until 4:15, forget about that. So we're adding half an hour. So there again, we have the sessions, the following sessions, closing the VAT gap and other gaps. You come back up here at 4:45. If you say, no, my session is controlling the growth of tax expenditures while preserving competitiveness and fairness, you will go straight to the Minerva room. So just like switch with the people that are there right now, the one next to the cloak room where you registered this morning. So we'll see each other back 4:45 immediately in the right rooms, whether it's here upstairs or downstairs. Thank you all for your attention and enjoy the coffee break. Enjoy the conversation starters. Enjoy the exposition because I suspect, Mr. Tridico, you probably made a call to Autoworld because there's a pop-up exhibition of Italian cars, 120 years of Italian design. So I think they did it especially for you and the Italian colleagues. So enjoy it to the fullest while you're having coffee and tea. Thank you and see you at 4:45. Okay. Wonderful. Thank you. I see an empty room downstairs, which is a good sign. That means that everyone is somewhere at least. Whether you're in the right room or not, that's for you to find out right now, because this is the session on closing the VAT gap, as I just mentioned. If you say, no, 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 that's not the one I want, then you should make your way down again and cross all the way to the Minerva room. If not, very welcome to all of you. Welcome to all of you back home as well. I hope you had time to take a coffee or tea in your home or office premises too. We're back this afternoon with a second session, but before going to the session, I'm just briefly going to mention the fact that unfortunately we were informed by the cabinet that the commissioner has been taken ill, so he will not be able to join us this afternoon. We of course wish him, all of us wish him well, and we hope to see him back on another occasion very, very soon. But that means that you will have plenty of time to ask questions to the panel, which is also always a good thing. I'm only telling this right now to the panelists so that they cannot run away anymore. No, no, no. Rest assured, you're in the hands of a very good moderator, and I'm sure that he will deal with everything accordingly. May I then, this being said, invite the panel to the stage so we can actually have all of them seated. So the moderator for this session is Mr. Declan Costello, Deputy Director General for Economic and Financial Affairs. Yes, you can applaud him. And may I invite all the panelists to join him on stage and take your seat. Mr. Costello will introduce each and every one of you individually, so you will have plenty of time. Voilà, Monsieur Pimpy. Yes, everyone to take a seat. I'll say, enjoy this session. I'll see you later on. I'll be walking up and down between both rooms. But as I've just said, you're in extremely good hands. Enjoy the session.
So good afternoon, everybody, and thank you for joining this final session of the first day of this great conference, where we're going to be looking at closing the VAT gap. Now, the tax gap is the difference between the amount of tax that can be theoretically collected and what is actually collected. And the difference between the two amounts can be due to either policy choices or to the fact that there is a difficulty in the enforcement and the collection of those taxes. And it is this aspect of the VAT gap, the compliance gap, that we will focus on in this session today. Now, I would like to congratulate my colleagues from DG Taxud on organizing a session on tax compliance in a beautiful venue surrounded by Ferraris, Lamborghinis, and Porsches. So, now, if we look at the VAT compliance issue, or in the report of DG Taxud published last year, the size of the VAT compliance gap is huge. It amounts to an estimated 128 billion euros a year, or close to 10% of the total VAT liability. And the average compliance gap when it comes to corporate taxes is estimated to be even higher on average across the EU. Now, our panel today is going to try to discuss the causes explaining the tax compliance gap, but also the policy actions which can be taken to mitigate this, what's been working, what has worked less well. So let me first introduce our excellent panel, and they come from the world of politics, they come from the executive side in national tax administrations, and also from the private sector. So on my far left, we have Pierre Pimpy. Pierre is a member of the European Parliament. He sits on the Committee on Economic and Monetary Affairs, where he mostly focuses on economic policy, taxation, and competitiveness issues. Now, prior to becoming a member of the Parliament, he was a senior civil servant in France with extensive experience in the Ministry of Ecology, and he later became the Deputy Director General of the French Railway Safety Authority. I should stress that Pierre will speak in French and there will be interpretation. So also for the people who have joined us online, you will get the interpretation feed straight away. There's no need for you to take action on that. Our second speaker, or our second guest, is Chrissa Milieu. She is the Secretary General for Tax Policy at the Ministry of Economy and Finance in Greece, where she shapes and coordinates tax policy across all areas of taxation. She is a tax lawyer and extensive experience in the public and private sector, including experience at a senior level in PwC and Grant Thornton. Our third panelist is Elko van den Enden, who is head of the Accountancy Europe. He also previously headed PwC's global ESG platform for tax, legal, people and organizational services, and has held many senior positions in publicly listed companies. And finally, and I'm very scared about trying to pronounce his name, we have Ferenc Vajvelji, okay, Commissioner at the National Tax and Customs Administration of Hungary. He has had various positions also in the world of academia. He has been chairman, or is chairman, I think, of the Hungarian Scientific Association for Info Communications and has authored many scientific publications on the topics we will be discussing today. Now, in terms of the session, we will have various rounds with the panelists, but what we're going to do is start with an open question to each of the panelists in turn, where I will invite them to comment on what they see as being the biggest or most important challenges in the area of tax compliance at the current juncture. And I would like to start by inviting Mr. Pierre Pompey to start.
Bien. Je sais pas comment ça marche.
Je pense que ça marche, c'est bon.
Ok, c'est bon. Alors, c'est vrai, comme on s'est dit, eh bien, la TVA est quand même l'une des principales sources de financement des États. Donc, quand on a des écarts de collecte, c'est rapidement sensible et un gros problème.
It's true that VAT is one of the main sources of government funding, so when there are gaps in collecting the VAT, it very quickly becomes a sensitive issue.
Alors, on se trouve face à des fraudes qui sont de plus en plus complexes et qui sont de plus en plus de nature transnationale. Et donc, ça passe évidemment par des réponses qui sont prises par l'ensemble des pays de l'UE et qui passent par des échanges assez poussés et assez rapides et fluides entre les différents services fiscaux des États au sein de l'UE.
VAT fraud is becoming ever more complex and it has a very strong cross-border component these days. And so what we need is measures taken by all member states to ensure that there is rapid and advanced exchange of information among the tax services.
Alors, donc, un des problèmes que l'on a, c'est que les systèmes fiscaux au sein de l'UE sont très fragmentés, puisque chacun des États recèle ses propres choix, ses propres taux, ses propres façons de faire. Mais je voudrais insister sur un point, c'est que le fait de lutter contre les fraudes, certes, donc il faut rendre les systèmes fiscaux plus simples, mais cela ne doit pas sous-entendre de remettre en cause le principe de souveraineté fiscale. Il faut que chaque État conserve ses choix et je pense qu'il ne faut pas qu'on tombe dans le piège de profiter de crises, de profiter de problèmes, de profiter de fraudes pour remettre en cause un certain nombre de principes.
One of the main issues is that the tax systems across the European Union are rather fragmented, with each member state operating its own choices, applying its own rates, and having its own very different system. What's important when we combat VAT fraud through means of simplification is to not lose sight of the matter of sovereignty. Tax sovereignty is one of the key principles that has to be upheld. Member states need to maintain the ability to make choices and devise their systems the way they need to do it. We cannot fall into the trap of seeing an issue, seeing a crisis, and using that to change the systems in a way that member states lose control.
Vous savez, quand on est face à des problèmes, à des écarts de collecte, à des fraudes, eh bien, le premier réflexe, c'est de renforcer les contrôles. Mais je pense que ce réflexe-là ne devrait venir qu'en trois. Le premier réflexe serait d'avoir un impôt sage. En fait, le risque de fraude est quand même plus bas quand l'impôt est raisonnable et quand le consentement à l'impôt est fort. Ça devrait rester la première des priorités quand on est face à des fraudes.
The issue of the VAT gap and tax fraud in general obviously leads to a knee-jerk reflex of more controls and more audits. But what we really should be doing is focusing on a different way of addressing this by, for example, having a more reasonable rate of taxation, which would naturally lower the fraud and lead to more approval of the taxation itself.
Et le second réflexe, la seconde des priorités devrait être d'avoir des systèmes fiscaux simples. Plus un système fiscal est compliqué, plus il présente des failles, des points faibles, plus il prête le flanc à des écarts et à des fraude. Donc c'est vraiment là la seconde des priorités et une fois de plus, le contrôle ne vient qu'en troisième.
So that was the first priority, and the second priority is to have a more simple system. A simplified system is better because the more complex the system is, the more loopholes there are that can be taken advantage of, and the more inclined people can be to take advantage of the system. So increasing controls and audits really should be the third measure.
Donc face à cela, et bien les idées ne manquent pas. Je pense que nous y reviendrons et je ne vais pas être long sur cela. Moi, j'avoue que j'ai toujours eu une prédilection pour le paiement scindé de la TVA. Dans ce système, eh bien, c'est la banque du consommateur final qui prélève la TVA sur son compte en banque et qui la verse de façon directe au fisc.
Given these three priorities that I've outlined, there are many possible ideas, and we'll get back to those later. I don't want to speak at length about them right now, but I do want to say that I have a preference for a split payment mechanism for VAT payment, which is a system where the bank of the final consumer pays the VAT amount directly to the tax authorities.
Mais ce n'est pas cela qui aujourd'hui a le vent en poupe. Donc aujourd'hui, on parle plutôt du process de la facturation électronique. Et en fait, donc en France, les grandes entreprises vont s'y mettre à compter de septembre 26 et les autres à compter de septembre 27. Donc ça se prépare et vous savez, donc nous avons cette chance, c'est que nous prescrivons. Alors c'est un rôle simple. On a en France un aphorisme selon lequel les conseilleurs ne sont pas ceux qui règlent. Mais en fait, quand on a des échanges avec des chefs d'entreprise, eh bien, ils sont effarés face donc à ce système qui se prépare à compter de septembre 26.
This is not the most popular option, however. What people are turning to these days is electronic invoicing, and that's something which in France is going to be rolled out for large companies as of September 2026, and for the remaining companies as of September 2027. So it's something that's very much in the works. We here tend to make recommendations, and it's not the advisors themselves that go about regulating and fixing problems. But when you speak to companies themselves, what you realize is that they are not at all happy with the system.
Alors, en fait, pour faire très très rapide, donc les entreprises vont en fait passer par des plateformes privées, et ce sont elles donc qui auront toutes les infos essentielles sur les transactions, et qui auront les sommes en jeu, les RIB, tout. Et en fait, en voulant résorber des fraudes, il se peut que l'on en crée d'autres.
And so in short, these companies are going to be using private platforms which will have all the information, all the essential information to each and every transaction, such as the amounts, but also the bank details, which means that by trying to fix the issue of tax fraud, we might be opening up opportunities for other types of fraud.
Voilà, donc c'est là que j'achève ce premier propos. Je vous rassure, je ne serai pas plus long. En fait, ce que je veux dire par ces exemples que j'ai pris, c'est qu'il faut être très très humble, très très prudent dans ce que l'on projette de faire, et veiller à ne pas faire en sorte que le remède s'avère pire que les maux que l'on prétend résoudre. Donc il faut rester très très prudent. Voilà.
I will end off here. I can assure you I won't be speaking at too great length, but these examples that I gave you were simply to show that we need to be humble in our approach and very cautious going forward, and we need to ensure that the cure that is chosen is not worse than the disease itself.
Thank you very much for that very clear exposition of your principles and some key issues. I could hand the floor now to Chrissa, who could maybe set out what she thinks are the most important issues in this area. And obviously Greece is one of the countries where we've seen some important changes in recent years.
Yes, thank you, Declan. First of all, we are no longer dealing with a single problem such as classic tax evasion. So it's not compliance gaps only in the strict sense. The tax that is legally due but not paid, not reported, or not collected. What we see instead is a combination of different and overlapping tax gaps. So the environment, first of all, is much more complex. Secondly, is the globalization. The absence of borders in Europe, cross-border transactions, and the growing interconnection of global markets. These are major challenges for tax compliance. They make it more and more difficult for tax authorities to monitor transactions and ensure that tax obligations are properly fulfilled. Even more when combined with technology, which means rapid movement of information and new forms of transactions, for example, cryptocurrencies. Technology does offer solutions to combat tax evasion, but at the same time, it could create tax evasion and contribute to the creation of unreported revenues. So in this context, Greece and the EU member states continuously modernize the legal framework, for example, the DAC directives, to adapt to the new era. Finally, I think building a tax compliance culture is a significant challenge. A tax system cannot rely only on audits and on penalties. It also depends on voluntary compliance, which is strengthened when the taxpayer really understands the tax system, trusts the tax administration, and considers the system fair and applied equally. And also, of course, if they can see actual benefits from the tax compliance. So the key challenge is to move from a traditional audit-based approach to a more targeted, data-driven and transparent compliance strategy, and of course, with strengthening the culture of tax compliance.
Thank you very much, Krista. Maybe now we could turn to a view from the practitioner side and from the private sector. So if I could hand the floor to Elko, who is CEO of Accountancy Europe.
Thank you very much. So why is it important that we solve this problem with it 123 or 128 billion excluding CIT? That is, we need the money. We live in interesting times, as we say. We know that many governments have deficits. We try to keep afloat our social welfare states. Austerity leads to a bit of social unrest, but on top of that, we now also need to invest in our own security, so we need more money. So there is no reason, no sensible reason why we should not try to close this gap, because you cannot cost cut yourself into socio-economic cohesive societies. So that's why I think it's very important to lose this once and for all. Then the second question you should ask yourself, why is there a tax gap? There are reasons for that. You have people that just don't want to pay tax. You have people that make mistakes. And you have people that don't care anymore because those that commit fraud are not being prosecuted. And you can find studies on this. There are many of them. One of the most famous one is Kirchler's on the economic psychology of tax behavior. So we all know what are the reasons why it is what it is. So what can we then do to solve it? We know that it is important. We know who are the persons that commit the fraud and make the mistakes or are not longer motivated not to make mistakes. That is through, exactly as you said, simplification. And you cannot enforce compliance on entire societies. Cooperative compliance is the best way forward. And now with modern day technologies, I'm pretty much convinced that issues around cooperative compliance that are currently withholding many tax administrations in not pushing for this can be solved, yes, indeed, through AI, which we will soon see. The other thing is that I think in Europe we make a big mistake in not fully understanding that national interest could not be compatible with national identity. So the strict independence and the strict sovereignty around taxation is not something that creates growth and value add to all us Europeans. We can retain a national identity whilst becoming more aligned with our tax policies. Is that possible? Yes, it is possible. Is that necessary? Yes, it's necessary. Because the why do we need to close this gap is that we want to keep our socio-economic cohesion intact. And we can't keep that intact if we're going to levy more taxes. We're already overtaxed. And it will not be possible then to pay for our security, which has different issues than we need to solve. So, is there a solution? Yes, there is a solution. It means more cooperation, more voluntary compliance, but also more enforcement of those that do not want to stick to the game. And whether that's on VAT or on CIT or on individual income tax, I don't care. To me, that's all the same. The interesting part of VAT is that it's a real European tax. That's what we claim, but of course it isn't. The myriad of rates and rules and intricacies make it very easy, of course, to commit fraud or not pay what you are due. So I really implore to European Parliament, Commission and national authorities and governments to finally step over their own shadow and start to really align VAT in Europe. Thank you.
So thank you very much to the panel for that first round of questions. So I'd like to dig a little bit deeper. Oh, no, sorry, I forgot Ferenc. What am I doing? I've jumped ahead. Ferenc, I apologize. Over to you.
Thank you. So my approach is very different. I'm not from those beautiful ideas of identity and competitiveness, but much more practical. VAT is based on data. The VAT directive says when an invoice has to be released, what are the rules, how it has to be received, and on paper we know how to manage it. Now the EU has a new modified regulation for VAT, which includes the VIDA initiative, the VAT, the Digital Age initiative. This means that all the tax authorities knows every fiscal document regarding the VAT. What does it mean? It means that all the invoices on domestic and cross-border level, I mean the intra-European cross-border level, we know what economic events has happened. And all the tax administration can know it, and through the transaction network analysis, and maybe it's still working, and maybe with new analysis networks, we can calculate all the differences. But we have old-style tax audit systems. What if, let's say, 5% of the taxpayers commit some, not fraud, some arithmetic differences in the tax returns? We cannot initiate so much tax audits. This means that the taxpayer will know and will learn, because it will be their experience, that the tax administration knows the bug, but is unable to act. And that's a direct consequence of the professional data collection and the professional analysis. And believe me, it will cause a huge problem for all the tax administrations. In Hungary, we have an invoice reporting system. We have 270,000 monthly VAT reporters. And we can find arithmetic errors somewhere around 5 and 8%. And I will talk later how we can handle it, but we are still waiting for others' experiences as well. It's a bigger problem than anybody could think. And there are only 3 countries in the EU who can experience it: Spain, Italy, and Hungary, because we have those domestic invoice reporting systems that covers all the invoices.
Okay, thank you very much, and I hope we'll come back to some of those issues in more detail. So maybe we could turn to a little bit more detail on trying to understand or dig a little bit behind what the drivers and actually measuring these tax gaps. Let me turn to Elko again, because just to mix up the order of the interventions, could you dig a little bit deeper from your experience on, again, how the approach, you pointed that, that there is a need for more cooperation, we have to promote more cooperative compliance. Could you be a bit more specific on a few issues on best ways to measure, or which countries are doing best in this regard? Thank you.
I think we should start to create a level playing field when it comes to technological acumen. We see that many countries struggle with the sheer size of the amount of invoices that are being spread and sent out throughout Europe on a daily basis. And of course, cooperation with divergent systems is quite difficult. It is quite time consuming. So come with an overall strategy whereby the interoperability between the various VAT compliance systems can be aligned more to each other. That's a quite important topic. The second topic is the audit methodology. You have the automated audit methodology, the reconciliation. I still remember that it was back in 2010 that a then colleague in transfer pricing, CIT, said, no, transfer pricing is too complex to ever automate. Nowadays, we can automate everything under the influence of AI, which is computing on steroids. I think that the further investigation and the predictive analytics could really help in solving issues around the mistakes and the fault that we see in the international VAT environment. However, I still would urge the following. I worked for years for IT companies, and there was this quote from the technical IT colleagues that said, if you have a shitty process and you automate it, you have an automated shitty process. So we need to go back to the drawing table and redesign the VAT systems. How much I sympathize with automation, what we are going to automate must be sustainable, long-term, and must be reasonable. The amount of rules and regulations in the field of tax, including VAT, that's being poured upon smaller, medium enterprises that bear the brunt of this is tremendous. And that creates a very negative atmosphere, and that leads to non-compliant behavior. So I think digital transformation based on AI, international cooperation, also defining an audit methodology that is acceptable to all tax administrations. I mean, in the private sector, auditors work via methodologies and audit standards and reporting standards that are perfectly global executionable. And simplification of legislation, they are the three pillars to solve this issue.
Thank you very much. Chris, could I turn to you, because you have experience from both the public and private sector. Greece has done a lot in recent years to boost tax compliance and tax collection. So could you share a bit more about how you see the sources of tax compliance problems and any suggestions when it comes to reform or policy actions that have worked or can be taken going forward? Thank you.
Yes, thank you. Thank you very much. I will be honest. In Greece, we started from the basics. First of all, we made an analysis of the structure of our economy to identify which sectors are the riskier. And so evidence shows that self-employment, cash-intensive sectors, and sectors where third-party reporting is weaker are of the highest risk. After that, we analyzed the existing data. So we analyzed information we collected from the tax returns, from the DAC directive, from the CRS, third-party data, and data also from real life and from social media. At the same time, to quantify the tax gaps, we established a tax gap team dedicated to this in 2018. Measuring the tax gaps, we thought it could help assess the effectiveness of the policy and identify areas for reform. So we designed a whole strategy to promote automatic and voluntary compliance on time payment and tax collection, including a new method of taxation for the self-employed and a series of digital tools, for example, My Data electronic platform for real-time reporting and monitoring of business transactions, e-customer registry, e-delivery documents, expansion of electronic payments through the use of cards and digital payments like Iris. They all help to reduce the use of cash, which links to revenue losses. The gradually mandatory e-invoicing, e-filing of tax returns, pre-filed tax returns for certain categories of persons or incomes, and of course the use of AI for tax audits especially. Finally, we are designing new tools based on best practices, such as advanced tax rulings, with aim to strengthen the taxpayers' trust to the tax administration and to strengthen the predictability of taxation. So overall, the approach, our approach was a combination of better measurement of the gaps, digital tools, and structural reforms. Of course, I have to say that the technical and financial support of the European Commission was very useful to Greece because we had to overpass this difficult period of economic crisis, and we learned a very useful lesson. So now we are at a very better stage than some years before. And of course, we're very proud of it. So about your, regarding the second part of the question, if I have the time just to say two or three things. Taxation policy does not come in isolation, this is for sure. It is linked with many other policy areas. Of course, first of all, it's digitalization of public administration in general, something that we succeeded in the past 10 years. Another policy area is labor market regulation. Of course, the reduction or the ban of use of cash in transactions, for example, the real estate transactions. The regulation of the financial sector, that is very important. The gradual interconnection of all public authorities and registries. For example, in Greece, we established a land registry which records all information regarding properties and their owners. And of course, justice, because the fast resolution on disputes is essential. One example comes to my mind, and this is something new we are preparing, the cryptos taxation. In Greece, now, we are preparing the legal framework, which is closely linked to the financial framework, the regulatory financial framework, of course, the MiCA regulation, the banking system and its rules, the information exchange environment through the DAC directive, and the AI audit tools by the tax authority. Thank you very much.
Thank you. Ferenc, back to you. I mean, in your opening remarks, you emphasized the need for practicality, and you pointed to the complexity of existing systems and the sheer scale of reporting that's going on. Would you like to elaborate in more detail on any additional elements that regarding the measurement or actions to address tax compliance?
So we have a so-called EV80 system in Hungary. It's in operation for nearly 2 years. The use of this system is not mandatory. It's in, let's say, in pilot phase. We collect all the domestic and international invoices of the reported invoices of the companies. Also the customs data of imports. What we are missing now is strange, but the EU cross-border data. Because these data, the VAT information exchange system data, is lagging a quarter behind the actual, when the economic event actually happened. So it's advice for Taxud to power up the VIDA phase 1, DRR1, because DRR1 is missing. What is the most, what is the strangest is that just some % of the taxpayers use this system. And we really do not understand why is it. We offer them everything. They can select invoices, how much VAT they want to deduct, maybe 70% or just 30% if mobile phone usage, for example, or private car, company car usage. So they can do everything that is possible according to the accountant rules. And it's not popular. And I think we can share we can create three parts of the taxpayers regarding VAT. The first is the who makes the arithmetic error. That does not affect too much the balance, VAT balance, because the error can be positive or negative. The second one is who is deliberately wants to delay the payment, the obligation. They usually delay the declaration of cancelled received invoices, and they try to select the accounting items on the way they can do it on their best. And the third one is who wants to create a well-prepared fraud scheme. This is committed by criminal groups usually. For example, the carousel fraud is that kind of fraud. Who wants to conceal their activity and who wants to gain the advantage of the fraud, and the original economic event is not important, maybe useless. Just the gain of the fraud is important. I think these are the drivers. These are the three drivers behind the VAT gap. And when we are talking about AI, we have to focus on the last two items. The first one is the error is just a old-style calculation. It's an arithmetic calculation where we can help them. So if the VIDA will be in full force, we eliminate the first segment, and we can focus on the second and the third one. The second one is can be called as a kind of VAT arbitrage, because in the long term, they do not gain any advantage against the treasury, just in the short term. So that's how I see it, and maybe later I can going into details how to tackle.
Okay, then perhaps we could turn to the issue of the role which the EU can play in policy and coordination and tackling tax compliance. So maybe I could turn to Pierre Pompey, because I mean, in your opening remarks, you stressed the importance of respecting national fiscal sovereignty in this area, but at the same time, you recognize the importance or the influence of international, actors and the EU in ensuring efficient tax collection. So perhaps would you like to say a bit more on how you see the role of EU institutions and cooperation in helping close the tax compliance gap? And perhaps you might want to respond or comment on the remarks of Elko, which also pointed to the fact that or pointed to the issue of that one can respect national identity while at the same time having stronger cooperation at European level. Thank you.
Alors, moi je pense que en fait, si l'UE a un rôle à jouer, c'est dans le fait qu'il faut qu'elle incite les États à avoir des systèmes donc un peu plus simples. Et puis donc pour rebondir sur ce que l'on s'est dit sur le processus de la facturation toujours un peu de mal avec ce mot-là, électronique. Et bien, je pense que si la France donc adopte, passe par certaines façons de faire, eh bien, il faut que les autres États aient des façons de faire proches, de sorte qu'après les infos puissent s'échanger selon des formats qui soient selon des formats semblables.
Well, I think if anything, the EU's role would be to urge member states to simplify their taxation systems and to get back to the process that we were talking about earlier about e-invoicing. I think that given that France is going to roll out a system, it would be useful if other member states were to roll out similar systems so that data is exchanged in similar formats.
Alors, on voit que, en fait, souvent, les fraudes vont très très vite. Et en fait, les sommes partent, bon. Et en fait, il ne faut pas que les échanges se passent en 3 mois ou plus. Donc, il faut que les échanges puissent se faire de façon bien plus simple. Et en fait, ça passe par des plateformes qui soient donc en lien les unes avec les autres. Alors, bon, je vais pas trop être long.
Often the fraud events happen quite quickly and the money simply just disappears. So if it takes 3 months for data to be exchanged between authorities, that's just too long. We need a system that's faster, that's simpler, and perhaps is based on a system of connected or interconnected platforms.
Voilà. Donc, en fait, je pense que sur le plan fiscal, comme dit, c'est à chacun des États de faire ses choix. Bon, moi, je suis français, je ne trouve pas que la France fasse de bons choix. Mais c'est la règle, c'est le principe que chacun vote, que chacun fasse ses choix. Mais il faut en tout cas veiller, et ça c'est probablement le rôle de l'UE, il faut veiller à ce que les systèmes se parlent. Bon, alors, je voudrais juste faire un rebond sur l'IA, car en fait, c'est vrai que l'IA peut rendre certaines choses plus simples. Avec l'IA, eh bien, donc on repère beaucoup plus vite les points de risque.
I said earlier that taxation needs to be left up to the choice of member states. Now, I am French, and that doesn't necessarily mean that I agree with all the choices that are made by France, but it is the principle. We each have a right to make our choices and to vote, and for our choices to be reflected. I think what the role of the EU is, it's to ensure that the various systems that exist in the different countries are interconnected and that they can work together. Which brings me to the topic of artificial intelligence. I think that there is definitely potential for AI to make things simpler and allow us to better identify risks.
Voilà. Mais en fait, bon, moi, je vois que l'IA, c'est très bien, mais ça ne peut pas tout faire. Ça voit des points de risque, des zones rouges, mais ça ne valide pas les risques. Et il faut bien des hommes et des femmes pour vérifier que les risques sont vraiment là. Donc, en fait, je vais prendre le cas de la lutte, non pas contre les fraudes, mais contre le blanchiment. Et ce sont les banques qui jouent un rôle sur ce registre-là et qui se servent très souvent de l'IA pour voir quels sont les comptes à risque. Et ça, c'est simple. L'IA voit si vous faites des achats en France, en Grèce, si vous allez ici ou là, eh bien, si c'est le cas, l'IA dit que vous présentez un risque. Si vous avez des sommes qui sans cesse rentrent sur votre compte, qui en sortent, s'il y a un très gros flux, eh bien, l'IA repère cela et voit que vous êtes à risque. Mais après, il faut qu'il y ait des hommes pour dire si le risque est vraiment là, parce que donc c'est pas si gênant que cela. Si vous avez des sommes qui rentrent sur votre compte, si ce sont vos revenus simples, et si les sommes qui en sortent, ben, ce sont vos achats, et c'est pas forcément si grave si vous allez à Chypre ou ailleurs. Bon, mais là, en fait, on voit que les banques procèdent avec l'IA pour voir les risques, et quand elles voient qu'il y a trop de risques, plutôt que de vérifier, parce qu'elles n'ont pas les hommes et les femmes pour, eh bien, elles ferment le compte, même si les gens ne blanchissent pas. Moi, j'ai eu 5 comptes fermés, je vous assure que je ne me drogue pas et je ne vends pas de drogue.
As I was saying, artificial intelligence is good and has a lot of potential, but it isn't a magic bullet. It can identify risks, but it cannot check that these exists are actually a reality. What you need is people, men and women, who can actually double check. For example, if I take the example of the fight against money laundering, banks use an AI-based system to identify suspicious accounts and suspicious movements on accounts. So, for example, the AI can detect if you are traveling to France or to Greece, or if you have strange purchasing habits. If there's a lot of money coming into an account or going out of the account, it will be flagged up as a suspicious account by the AI. But what you then need is humans to double check that this is in fact suspicious, and it's not just your salary coming in and your purchases going out, and that you didn't just take a trip to Cyprus. What banks do is they use this technology to identify the risks, but when these risks or the flags become too many, instead of having humans to check what is being done, what is actually happening, and if you're just an innocent individual, they simply close down the account because they don't have the manpower. This has happened to me. I've had 5 accounts closed down, and I can assure you I do not buy or sell or trade in drugs.
Voilà, et en fait, c'est nous qui, au sein de l'UE, avons voté ces règles contre le blanchiment. Et en fait, le résultat, c'est qu'il y a des tas de gens qui se retrouvent sans compte en banque. Bon, eh bien, moi, je ne veux pas que des entreprises se retrouvent sans plateforme, eh bien, pour préciser le détail des factures faites. Et puis, donc, il y a aussi le fait que je ne veux pas qu'on se retrouve avec des plateformes privées qui recensent tous les chiffres sur les comptes en banque, sur les flux, sur les achats, et qui revendent ça après. Donc en France, on avait mis en place un système, et en fait, ça partait un peu de ce principe-là. C'était pour faire donc immatriculer son véhicule, et cela passait aussi donc par des plateformes privées. Et en fait, on se rend compte qu'il y a des tas de plateformes privées qui se sont créées à seule fin de frauder. Voilà. Et en fait, il s'est avéré que l'État n'a pas agi suffisamment tôt vis-à-vis de ces fraudes-là. Donc, vous avez en France des tas de véhicules qui circulent, mais qui ne devraient pas le faire. Vous avez des véhicules volés. Voilà. Bon. Et en fait, donc, on se rend compte qu'un système qui devait résorber les problèmes et les fraudes s'avère encore pire que ce que faisaient les FETA. Donc je pense que c'est quand même un piège de trop miser sur les plateformes privées, sur les fichiers qu'on remplit. Donc on ne sait pas où ça va, donc ça peut tomber entre de mauvaises mains. C'est aussi donc une erreur de trop compter sur l'IA. Et moi, ce que j'observe, c'est qu'à chaque fois qu'on prétend résoudre une chose, eh bien, on crée en fin de compte de nouveaux problèmes. blême. Et c'est un peu, et je pense que la responsabilité de l'UE, c'est de faire en sorte que l'on ne crée pas ces problèmes-là, parce qu'au bout du bout, ceux qui payent la note, ce sont ceux qui n'ont jamais fraudé.
At the end of the day, we ourselves are responsible for these anti-money laundering rules that have come into place. We are behind the votes that led to this. But what this has created is a system where many people have seen their bank accounts closed. I do not want to see a system in the future where companies cannot rely on platforms for their invoicing data. I also don't want to see a system which is based on a proliferation of private platforms which all detain very important information like bank account details, like details relating to transactions or purchases, and that they then use this data and sell this data. In France, we have a system which was based on private platforms for vehicle registration, but it led to many problems, and there were many of these platforms. Many of them were created specifically for the purposes of committing fraud, and the state realized it only when it was too late. So we now have many vehicles on the road in France which shouldn't be on the road. Possibly some have been stolen. And the system shows that very often when we try and fix these problems in this manner, we are worse off than before. I think we need to be very aware of private platforms, of online forms where you just fill in your data because you don't necessarily know where that information goes. It might fall into the wrong hands. I think it's a mistake to rely on artificial intelligence too much. Very often what we do is we try and fix a problem using AI, but more problems end up popping up. And the ultimate responsibility of the European Union is perhaps exactly that, to ensure that these additional problems are not created, because at the end of the day, the people who pay the price ultimately are honest consumers.
Okay, thank you. So thank you very much for that. Maybe with an eye on the clock, just if I could ask panelists just to try to keep the answers a little bit briefer. Maybe I could turn to Chrissa. Have you any suggestions on the role the EU could play if you were to create a forum for member states to engage in peer-to-peer discussions? What could that look like? And I guess also Greece has also, benefited in the past from a lot of technical support from the EU. Is this an element which should be part of the toolbox? Thank you.
Yes, thank you, and I will be very short. Yes, the Greek presidency is coming, and it is really a very important area for coordination between member states. I mean, this discussion about the compliance tax gap. Governments are under constant pressure to secure revenues and improve tax collection. Tax gaps relate not only to tax compliance gaps, though, but also to tax policy gaps. But this is a politically sensitive issue for member states. So I believe there is a need for the appropriate mix of political commitment and technical support. So the discussion has already started. A first exchange of views took place on last January at the high-level working party, where the Commission presented the Mind the Gap report. Given that the discussion is continued, and there will be progress until the Greek presidency, the way that we could set up such a structure, I think it will depend on the developments at that point of time. Considering the experience gained so far from similar groups, and I have on my mind the the Code of Conduct group, we can take it up both politically and technical. So an idea could be to set up a structure, a two-level structure. A permanent group to discuss mainly the political issues, with subgroups, with participants from tax administrations or statistical offices for the technical issues. These subgroups would report on an annual, for example, basis to the main political group. These kind of exchanges at high level could be very effective in identifying the right methodologies and the policy options. And on the other hand, real progress could be achieved by enhancing cooperation between the tax administrations. So the two levels will bring a result. Three key elements here I can see. So measurement, implementation, and cooperation coordination, but with a political commitment. Thank you.
Thank you very much, Carissa. Maybe we could turn or dig a little bit deeper into the issue of digitization and AI, which as already a number of you have mentioned. Maybe if I could turn to Elko from your perspective in the accountancy profession on, well, both the opportunities and the difficulties posed by developments in AI. So can it help in terms of compliance? Can it help with ensuring a more level playing field? What about the need for safeguards, which were mentioned by Monsieur Pampi in his remarks?
Yeah, I think Monsieur Pampi raised a very important topic, and rightfully so, as we more or less already earlier said. You cannot solve structural problems when it comes to the quality of legislation by automating it. What we see with AI, powerful tool, computing on steroids, will give a lot of opportunities, reconciliation processes, financial auditing in the past. It will all be more or less automated, but you need indeed professional judgment in order to see if the answer fits within the context. And you are still the organization and the board that decides upon its own strategic objectives and its own purpose. That is something you cannot automate. The issue is, however, that with the complexity of the legislation as we see it, and if you indeed start to automate it, that we see that many tax administrations, they have a maturity level that is not there to fully start to adopt AI. So what you see is typically what we've also seen with anti-money laundering, is you basically outsource it, in this case to banks or professional service providers or external accountants to provide a level of assurance. Not everybody, small, medium enterprise, can afford that, or even you get a discussion that businesses that never paid for that before because they were services typically performed by tax administration, authorities, financial markets, have now been semi-outsourced and need to be paid for by those businesses itself. And that only increases the burden of the cost of compliance. So now thinking that AI is like this magic solution that will solve all the inconsistencies and illogical issues that we have embedded in our local legislations, it can support it, but it will not solve the principal issue that we need more alignment and simplification. We need to make sure that legislation is easy to comply at low cost, showing a visible value add. And I believe that AI can even help designing legislation around those topics. But we should be very careful. Be careful what you wish for. A fully automated system and control system creates an Orwellian 84 state. And I think that the individual is still central and must be still central in European politics.
Thank you very much. Maybe I could turn to Ferenc to see if he would like to come back on this issue of artificial intelligence. You've already mentioned some experience with this in Hungary, but maybe you would like to address some of the issues that have been raised by other panelists. Thank you.
Yeah. I think the biggest issue is now that the economy the European economy is not fragmented, but our databases are fragmented. Would it be a good decision to join them? Without data protection guarantees, I mean business data protection guarantees, it's not feasible. I don't want to share my taxpayers' data with other member states as open data. But I would be very happy to share the data on the way to reveal fraud. This means that we should hide the identity of the taxpayer, but not the attributes of the business transactions. But without a European level data confidentiality regulation, it's not possible. Everybody is talking about GDPR. GDPR is focusing only on natural persons and not on business confidentiality. So we should go on with the data collection. My answer is we should go on with the data collection according to the VIDA initiative. Maybe we can extend it to other areas, not just the VAT. And we should build up data lakes in national level, just on national level, with connections with other member states, but those connections must be anonymous. And then we can reveal the most complicated EU-level fraud. So that's my program or answer for your question. Thank you.
Thank you very much. So we're approaching the end of this session. I don't see many questions on Slido, so maybe I can just turn to the panelists and ask them for a sort of a final word on what they would consider the top priority for action to close compliance gaps, be it at national or European level. And so maybe we could start with Monsieur Pampy to your final thoughts on what are the most important issues. Thank you.
Alors, donc, ce n'est pas très évident de répondre à cela, parce que moi, je pense qu'il n'y a pas qu'une seule façon de faire. Donc, il y a plusieurs façons d'envisager les choses. Et pour trouver une priorité, ça ne va pas de soi. Enfin, voilà. Donc, moi, je pense que là... que s'il fallait vraiment que l'on voit quelque chose à faire en premier, c'est rendre les systèmes plus simples. Donc faire en sorte que les systèmes se parlent, donc que l'on faire en sorte que les services fiscaux, donc en France, puissent savoir ce qui se passe très vite, de façon très simple, donc voir un peu les échanges, les transactions qui se passent donc au sein de l'UE. Donc il faut qu'il y ait donc une sorte de droit de regard donc entre les services fiscaux. Et puis, je rajoute un point, parce que vous vouliez savoir que peut faire l'UE, que les États ne peuvent pas faire seuls, en fait. Donc, je crois qu'il y a un certain nombre de fraudes donc, qui transitent au sein de l'UE, mais qui donc après en sortent. Et donc il faut que l'UE puisse faire pression sur les autres États qui sont des refuges de fraude. Voilà. Et parce que en fait c'est un problème, ces écarts, ça ne concerne pas que la sphère UE. Donc on en sort. Donc il y a des liens avec l'Inde, avec la Chine, avec l'Afrique. Et en fait, le gros problème, c'est que quand ça sort de chez nous, on n'a plus la main. Voilà. Donc je pense que l'UE doit avoir une certaine force, une certaine... Donc elle doit pouvoir faire en sorte que les autres États donc aussi jouent le jeu.
I don't think that's a particularly easy question to answer. There isn't just one way of going about it, and identifying one priority is not going to be easy at all. But what I really think is that the main thing to do, the first thing to do if we had to pick, would be to simplify systems and make sure that systems are interconnected, that they link up with each other. It must be possible for the tax authorities in France, for example, to have quick knowledge, to be quickly informed of transactions which are happening in other member states. It's the only way. So there needs to be some type of shared knowledge among tax services at EU level. And as to what the European Union can do that member states cannot do, well, I think a lot of the fraud that we see at EU level also involves funds that then leave the borders of the EU. The money goes out of the EU, and the EU needs some way of putting pressure on states that make it possible to put pressure on tax havens. The gaps that we are talking about are not just gaps at EU level. As I've said, the money makes its way outside of the EU. It goes to India or to China or to Africa. So the main issue really is the fact that once the money does leave, our hands are tied, the EU can no longer do anything. So it needs a way of putting pressure on other states so that they also comply.
Thank you very much. Chrissa.
Yes, thank you. If I had to highlight only one element, I would say that it's the people, the culture. So we have to build a strong culture, compliance culture, and in order to do that, we have to have, first of all, a simplified and very comprehensive tax system, so that the taxpayer can trust the tax administration, can understand the tax system, and considers it fair and applied equally. So this is the main thing, I would say, because the result we would like to have is the taxpayer to choose to comply and not to comply by enforcement. I know it's very difficult, but it's very interesting as well. Thank you.
Thank you. Elka, final word.
Adding to that, international aligned digital enforcement as one step, and the other one is simplification.
Farage.
I have 3 points, 1 point more. The first is the common business confidentiality rules. Without these common rules, we cannot share data. It's unfeasible to start administrative process in Greece, for example, for me, if the data is mishandled. The second one is a partially automated co-analysis on anonymous or pseudonymous data on EU level. And the third one is an automated data error reconciliation and decision-making process, because otherwise the king is naked. because we know the errors, but we cannot act, and we have to avoid it. Thank you.
So thank you very much. So I'd like to thank all of our panelists for a very wide-ranging, interesting discussion. There was some, I think, common elements in the remarks. I think the importance of strengthening tax compliance was shared, partly because we need the money, but also I think social cohesion, fairness, these arguments were stressed. I think I heard all of the panelists stress simplification. Now, simplification in different forms, whether it's on the tax policy side, the systems, but I think that was a common theme which emerged. The other element which emerged was the potential role for digitization, AI, in terms of automation, but with caveats and the need for safeguards that this isn't a silver bullet, and there are a lot of complexities when it comes to privacy, data sharing, and that these will take time to work out. And the final message I picked up was that there is a role for cooperation at European level, that that these are competences, a lot of this at national level, but the EU has a role to play in sharing best practices, partly through the simplification process, and also in terms of the international sphere. So maybe I will close up here, but maybe you could express your appreciation for our excellent panel here today. Thank you.
Thank you all. Thank you all. Thank you, Declan. You did a wonderful job. Thank you to the panel. You did a wonderful job. Why? Not only moderating this panel, but you rounded it up already. So that leaves practically nothing to do for me, which is a great thing. Apart from maybe saying to Ferenc, be careful, you're in Belgium. So talking about naked kings being less than 2 kilometers away from the palace, you're allowed to do it. I'm not allowed to do it, but I just did it on stage. But anyhow, this being said, from a practical point of view, ladies and gentlemen, I would like to thank all the people that have watched us from the very beginning back home. I would like to thank you all having been here today. I hope I'll see most of you back tomorrow, but that will be in the European Parliament. So don't forget, do not show up at Ottawa tomorrow. The cars will still be there, so the horsepower will still be there, but we will not be there. So we'll just have a visit. From a practical scheme, they just announced me. It's a kind of fun factor, but I've seen that it has a lot of success down there as well, so it might have same success level up here. The small green plans that you see around the area are bought. We were talking about taxpayers' money and how to spend it well. So feel free to take one home. It's a gift from DJ Taxit, a sustainable gift. So all the small plants that you see, you can take them home. Be careful though. The large ones are rented, so not to waste taxpayers' money, those have to be returned. And if there are, like Commissioner Hoekstra, people that are 2 meters tall, 1.50 meter is a large plant. Even if you're 2 meters tall, it goes for you too, so don't take a 1.60 meter plant back home to Hungary, but you're more than welcome. Take one to Greece, to Hungary, to France, to Holland. Take a green plant, everyone in the room, on your way out or around the stage. Thank you all. Do not forget to take your coats. It's cold outside and they will close the building. So if you realize by the time you leave the metro station that you forgot your coat, you'll have to come back tomorrow as well. So thank you all for your attention and see you tomorrow. Have a nice evening and at home as well. Thank you. Thank you once again. There will be some pictures, I think, taken. Yeah.